For Puma later in the year, because of course you've got big sporting events on the calendar, the Olympics in Paris and the UEFA
Favourite
Euros.
event in the Olympics?
Swimming.
It's okay, you don't need trainers for that.
Not now, at least.
No.
Flippers, I don't know if Puma makes them. But look, this is an opportunity to make more technical sneakers, which is where the margin lies.
That's interesting, because it's interesting that the fashion story's been maybe made the driver recently. Anyway, right, markets are about to open. As I say, a muted morning, I think, is probably what we are anticipating. In terms of the early gainers, in terms of the points that we're seeing added, Novo is up, so that's going to add some weight to the upside. HSBC is also adding points to the upside, but Anheuser, here we go. Up quite nicely as well. It is rising, rising quite sharply, actually, up over 4% already at the get-go of trading here this morning.
That's a very solid, punchy gain coming through from AB InBev on the beat that's come through. Of course, all those concerns about the massive misstep on the marketing campaign around Bud Light in the US, that being put to one side, they seem to have addressed that. That was the takeaway from Bloomberg Intelligence. And the outlook as well, in terms of the premium segment, AB InBev now up 4%.
But Siemens Energy down 0.2%, so their headaches over the wind turbine business not in the rear-view mirror, like AB InBev's managed to put the marketing headache in the rear view.
They had an earnings beat on the top line for Siemens Energy, but they are wrestling, of course, with the Gamesa unit, and they're starting to rationalise that business. We also talked, when we spoke to the CFO, about competition from China, and he accepts that there is going to be very, very significant competition from those cheaper units coming through in terms of the wind turbines from China. This at a time, of course, when we focus on that visit by Xi Jinping. But across your markets, top of the list then, AB InBev with the gains of around 4%. TUI also posting some gains of around 5.3%. On a sector-by-sector basis then, Guy, and we'll be talking about energy with Freddie Late in a moment, because he's exposed to the energy sector. Basic resources down 0.6%. Top of the list, though, is personal care and bros up 0.7. Food and beverage now punching at the top in terms of the leading sector, up 0.8%, with AB InBev, of course, within that.
Yeah,
mix.
That's the big driver of that story. Interesting that I find it fascinating that the premium market is still doing as well as it is. In some ways, you'd expect maybe the consumer to start backing off, and you would have expected maybe this, and I thought we'd seen some evidence of this premiumization rollover that was happening, but it isn't, according to AB InBev. But other brewers are talking about kind of some risks in that market.
This kind of takes back to the theme that you keep pushing in, which is the mixed macro picture in terms of the data and the uncertainty there. And I wonder if we're getting a similar mix when it comes to the corporate story on the health of the consumer. Starbucks obviously taking a hit as people are buying less Starbucks coffees priced at $4. And yet those same consumers are presumably buying the Hoegaarden at $5 or $6, but not buying the cheaper stuff. So
maybe it's just expectations. Maybe just the expectations were a little bit lower in terms of what these numbers were going to deliver. Anna Edwards had a massive issue the other day. Was it lavender lattes? I think.
Oh, that tastes. The thought of that's revolting.
That was her reaction as well. That was her. I said it in a gin and tonic maybe, but not in some kind of a latte. But the reviews are actually quite good. Anyway, I digress. I don't know why, but we do. I think the real story that stands out to me this morning, though, is that we come back to what is happening with the industrial story out of Germany. The industrial data at the top of the last hour was maybe a little bit better than anticipated, but all of these German big, heavy industry manufacturers are talking about a recovery in the second half, and I'm wondering if that is premised on this idea. It is presumably premised on this idea that we are going to be seeing maybe the central bank coming through with some sort of a rate cut later this year. This time yesterday, we were talking to Beata Manthi over at Citi. This was her take on what is happening with these markets.
What we are noticing in this reporting season is the market is really focused on the delivery. So the companies get awarded much more in the previous quarters for the beats, and they get punished much more than in the previous quarters for the misses. On a relative basis, our view is that you buy continental Europe versus the US, and CAT will help.
Piotr Manthi, Citi's head of European equity strategy, speaking to the team yesterday morning. I want to point out that Siemens Energy opened now, and that stock up significantly, up by over 8%. So some signs of life maybe in the German industrial story. Let's carry on the conversation and talk more about what is happening. We're joined now by Freddie Late, managing partner at Latitude Investment Management. Equity holdings there include AutoZone, McKesson, Visa, Alphabet, and Tesco. Freddie, good morning.
Good morning.
Nice to see you.
You too.
Do you have a handle on this market right now? It seems that we are being whipped around on a daily basis. We're seeing huge moves for big stocks, like Siemens Energy up by over 8%, but even some of the big tech stocks are being whipped around by 7, 8, 9, 10% as their earnings come through. You've got some of these in your portfolio. What does that tell you about investor understanding of what is really going on?
It tells you it's low.
Yep.
And there's quite a lot of uncertainty. And I heard you guys talking a minute ago about this sort of mixed macro message, you know, consumer excess savings dwindled now, spending getting cut in certain areas, but still going gangbusters in others. I think we're at a point of intersection in the market where we see if we do finally follow through on a soft landing in the US, everywhere else is pretty mediocre, or if actually we see that consumer slowdown and we have, as we always suspected, borrowed from the future with all the spending and stimulus. So I think it's a real telling 6 months. Next couple of quarters are going to be very interesting. Some of the big moves, though, can be explained by other factors. You know, in Europe particularly, there's a lot of lagging, very good businesses. There's a lot of awful ones too. So I wouldn't buy Europe as a thing. But, you know, when you're seeing these stocks delivering results like Infineon, matching some of the numbers that are coming out of Texas or Analog, you will see that recovery trade coming through as people are finally broadening their horizons a little bit outside of the Mag 7 into the wider market. So I think there is a bit of market breadth, which is healthy. There's still a strong consumer and a reasonably strong economy, which is healthy. But, you know, interest rates are high, and that spooks people in high-growth, quality, sort of expensive stocks, as it should. And I think we're in for a tumultuous or turbulent summer.
So what do I do there? I don't know. I see potentially kind of a tumultuous summer coming up. Do I batten down the hatches and sit in cash? I know what I'm going to get there. How do I navigate this period? If I don't, it could go all one way, it could go all the other. What do I do?
So some people will go into cash. I mean, if you can get more than 5% in cash, that's not a bad outcome. You know, I'm an equity stock picker, so I'm not going to do that. But I think, you know, some people certainly will. Within the equity market, I truly believe you can find companies, you just named a few of the ones we own, which are growing very nicely, trading inexpensively. Something like McKesson reported last night, it's growing 15, 17% a year. It's on 15, 16 times earnings. That is a traditionally high-quality business. It's one of 2 massive players in drug distribution in the States. Finding businesses like that, or AutoZone, which you also mentioned, you know, it's on 17, 18 times earnings. It's grown at 20% a year for the last 15 years, continues to deliver those sorts of growth rates. It is in line with the growth delivered by the Mag 7 or other companies, not NVIDIA right now, but, you know, as a group, they are defensive, and you can find these businesses if you look. Some are in Europe, you have to dig around a bit, but I think that's where you need to be sharpening your pencils rather than chasing the momentum.
To part of the discussion we were coming back to at the start of the show around whether or not the second half is just more insecurity and more uncertainty for these corporates and investors, or whether you get this combination of catalysts, whether that is China, lower rates, and a relatively healthy jobs environment in Europe. I know you've talked about a challenge. You need to strap yourself in for the next 6 months. How do you think about that? You think it plays out in terms of more uncertainty? You're not convinced that those additional catalysts come to play in a meaningful way?
Yeah, it's not. I'm not predicting a crash or anything like that, and I'm sure plenty of people have, but no one's got a clue. I'm just saying I think it's really uncertain. And so, yeah, so those catalysts may be there. And, you know, 8 months ago, we thought the Fed might, or the market thought the Fed might cut, you know, 200 basis points. Now they think they might not at all. I don't really see interest rates as the biggest driver for the stocks we own because they're trading on average 14 times earnings. It doesn't make a huge difference. But you know, that is going to be the driver of the main generals of the market, the Mag 7 and things like that. So, yes, you kind of require a sense of dovishness there. The underlying employment numbers are amazing, as you say. So you've got, you know, my point is more that you've got pros and cons widely stacked on the scales, and I don't think you know which way it's going to tip. Not that I'm trying to predict it's going to the con side.
Back to the sector story. You like energy, for example. It's cash generative. We're seeing that again, even with BP, slightly challenged, but coming back with the buyback. when you compare that story to the Meg 7 story, there's an argument you can make that some of those mega cap tech stories with their own buybacks and return of cash to shareholders are also becoming value stocks. Am I overstretching that, or are you starting to rethink some of those big tech names in the context where you quite like those cash generative companies?
So it's exactly right. I mean, you need to look at these businesses on free cash flow. And, with BP or Shell or stocks like that, you're getting a 12% cash return at $80 oil. So that's the buyback and dividend added together is 12%. Any growth's on top, and if it moves from 5 times earnings, that's on top as well. With a more expensive company, the buyback just has less bite. So if the stock is trading on 25 times earnings and cash conversion's 100, the most it could buy back is 4% of its stock, whereas these guys are buying back 6 or 7. So that's the first difference. The second is the massive capex rollout that's going on within the big tech companies. So actually, if you look at their gap earnings and then you look at their free cash flow, right now there's a smaller level of free cash flow because they're investing so much in AI and data centers. So that's not to say that stocks like Netflix, which have pivoted from basically not generating cash to generating tons of it, Meta attempting to do the same with some of its cost cutting, that is exactly the right way to look at it. And we like these businesses. I think the point being, I think one should own some exposure to some of these businesses. We have some. But alongside that, be a little bit more inventive and have maybe some energy companies, maybe some banks, maybe some defensive value stocks, if you want to call them that. You will end up with a blended diversification of growth that will see you through the various outcomes as I predict them. It's cheaper, so you're not as exposed to interest rates, and I don't know, it's a bit more exciting.
And as someone who holds BP, of course, we heard from them yesterday. What did you make of Auchincloss saying, it's time to invest in low carbon energy, do some M&A, go counter-cyclical?
Yeah, I mean, they haven't proven to be very good at low carbon energy yet. But it's probably going to be in the wheelhouse of the big, the big IECs around the world. So I do think with this excess free cash flow, spending some, not none, like the Americans, is a good idea. They have done a lot of write-downs in the last 5 or 6 quarters. I mean, so there was another, I think, 700 million write-down yesterday, just went unnoticed. It's an enormous amount of money. And these are all write-downs from the renewable investments they've made in the last 2 or 3 years. And so they've already proven themselves to be quite bad at that. I think they'll be quite good at operating them. They have the engineering expertise and the massive global scale. They can integrate these projects into their trading business, which is fantastic, but also their distribution business. So I like it from an operating perspective. But the M&A, so his point is they're now cheaper. That's hence all the write-downs. So now we should be doing it. Well, it's like, you sort of shouldn't have been doing it last time, so how can I believe you this time? But I do think some portion of their capex needs to go into that, not just from an environmental perspective, but from a corporate perspective too. It's rational. So if he finds some good deals, genuinely good deals at less than asset value, then I'd support it. But
now I understand the long pause. If I can take my shot on the macro story, you've written about how a soft landing may yet beget further inflation. We've been playing Neil Kashkari throughout the morning. Are you in the camp with him that sees a chance the Fed hikes before it cuts?
Yeah, I can see a chance of that.
How big a chance?
I think it is data dependent. I mean, it sort of depends, but inflation is bottoming and plausibly ticking back up in the US. If inflation goes to 5.5, I give you a high chance. And I can see it happening. I mean, I'm not saying it's going to. Again, I think this is the story of the moment, is like very wide tails of likelihood rather than a real central case. But yeah, if inflation carries on ticking up, we've seen goods deflation stalling now. I believe energy prices are going to go up, and that's a major component of inflation and inflation expectations. Services seem to continue to be pushing through major price increases. I don't know what's going to happen with housing, but these are the main pieces. If that starts ticking up and it's 4 going to 5, it's not a cut, and it's certainly hawkish language, and I don't see why they wouldn't cut. I wouldn't raise.
Can I come back to BP for a moment? Because I think it's sort of emblematic of a number of different stories that are going around at the moment, one of which is, and you touched on the kind of the new energy story as maybe one reason for this, but European energy majors trade on a discount to their US peers. Why do you want to own European energy majors versus US energy majors? Why isn't Exxon in the list rather than BP in the list?
Very similar company, but it is because of that discount that we want to own the European ones. But
you want it? Do you think that discount closes?
No, not necessarily. When we buy stocks, we tend to own them for nearly 10 years. That's the sort of average holding period. So we're thinking over that period of time. If you're trading at, I don't know if Exxon's on 9 times earnings and BP's on 5, something along those lines, BP's cash flow yield, they're both generating a similar level of cash flow at an operating level, can buy back twice as much stock and return twice as high a dividend to us. And so where you may be getting a distribution yield, I don't know the numbers of it, in Exxon of something more like 6, and then your growth and maybe re-rating on top.
This is just an income story for you.
You get buyback and dividends, you get 11 or 12% at current oil prices. That's already a market-beating return with no growth and no re-rating. It is a very nice component to a portfolio. I do believe at some point in the future there is a high probability that discount narrows, but it's not going to be the next couple of years because European investors are basically banned through all the recent regulation from buying these stocks.
But you can.
But we can.
Freddie, great to see you. Thank you very much indeed. Freddie Lates, Managing Partner at Latitude Investment Management. Thank you very much indeed. There's a few stocks that I want to mention. Let's start off with the core 6 here in Europe. Ferrari. I just want to kind of draw your attention to Ferrari. Yesterday out with, by Ferrari standards, very muted numbers, and the market reacted quite strongly to that. It's interesting to see that stock under a little bit of pressure this morning. ASML strong yesterday, so we're kind of backing off that a little bit. Novo continues to climb a little bit higher. The story that Tom, you were just pointing that out during the conversation we were just having with Freddie on our little chat. Siemens Energy just restarted trading. It's up by over 11% now.
Yeah, it's pretty remarkable. So they had a temporary pause in terms of trading because of the volatility, it seems. Double-digit gains coming through from Siemens Energy. Look, this is something you've been flagging as well consistently, is just the scale of the moves that we're seeing on some of these stories now. It was an earnings beat. They're working through some of their issues with turbines, and they're rationalising the business, and they're being rewarded for that.
Let's catch up with more of this story and what is happening with the wider sector as well. Joe Easton's got the details of that. Joe, over to you.
So Siemens Energy, as you say, getting that massive jump at the open, up around 11% following those earlier trading halts. Now, it is the core power and renewables business that is doing well at the company. The wind turbine business, Gamasa cutting jobs. The CEO of that business is stepping down, but the market focusing on the rest of the business, and we're up 11% for that one this morning. But I wanted to bring up SMA Solar, which is a peer over in Germany, getting absolutely slammed. It is a profit warning, cutting their sales guidance related to the construction and home industry, people not installing as many solar panels in new homes, people and builders. That stock down 14%, kind of shows us it's not a sector move on Siemens, it is individual. And Alstom over in the train space, getting a 10% jump in France. It did drop 4% at the open of trading. They're asking investors for around €1 billion. Part of that is through a rights issue, but that stock had 3 consecutive years of decline, so finally a bit of a rebound for Alstom on those debt worries this morning. Then in terms of some other earnings, we're going to look at those car makers, Continental, the parts firm, falling, and BMW as well. Margins at both of those were pretty weak. They are seeing rising wages, rising energy costs, supply chain issues, still a constraint for both. Continental is the underperformer, so BMW kind of catching up with the declines on that one, both of those dropping. In the beer space, you were discussing that with BI earlier. AB InBev getting a decent gain, the maker of Bud Light, also Stella Artois, all of those favourite brands. Everyone looking forward to the football and lots of beer drinking there. They are seeing strong guidance for that one. One firm that is at the lower end of guidance, my old favourite, JD Wetherspoons, that one coming up. They have got some sales guidance. They don't show the football, unfortunately for them, so they won't get that Euros boost, but they are reporting pretty strong sales out of Spoons this morning. Then we'll take a look at a couple of others that we had our eye on in at the pre-market. Puma, there it is. Lizzie Burden reckons you can get Puma slippers. I haven't seen those myself, but that one is gaining. They are trying to compete with the Samba shoes out of Adidas, doing pretty well. But Boohoo, the online clothing retailer, warning of some weakness in the consumer market. That one's got some debt issues as well, so it's coming down. And a couple of other consumer ones, Hold, the big grocer over in Amsterdam, and Henkel, the maker of chemicals supplies into the pharmaceutical space. Both of those getting decent gains following earnings as well. I wanted to check in on the airlines this morning because yesterday Ryanair's CEO shocked the market by giving an interview saying that prices will be lower over the summer. Good news for all of us, but not good news for the sector. All of those stocks absolutely slammed yesterday. We're seeing a bit of a bounce back in EasyJet and Wizz. Ryanair, though, hit by those issues over at Stansted. Anyone who's managed to get out of that airport this morning, they've done very well because they have had issues with their turnstile miles. That one is underperforming. Lufthansa does actually have an upgrade over at Barclays this morning. They reckon you should buy the dip on that one. Finally, quick shout out for Borussia Dortmund. What a win for them. They did beat Paris Saint-Germain. They've reached their first Champions League final for 13 years, and the stock is up 8% this morning. It's a massive gain for them. They'll get 15 million euros in prize money immediately from that. Will they upgrade their guidance? Doing very well. We've got the other game tonight, Bayern Munich, Real Madrid. Who will they face at the end of the month? But for the moment, Borussia Dortmund up 8% following that victory.
Joe Easton from our equity team, thank you very much indeed. Arsenal still top of the Premier League is the most important line when it comes to football. Thank you, Joe. Checking in on the breaking news around an AI chip maker, Graphcore. It's long struggled, in fact. It was once valued about 2.8 billion. Now it seems SoftBank is in more detailed talks. Apparently these talks have been going on for a couple of weeks at least, and if not a couple of months. SoftBank in talks then to buy the UK AI chip company Graphcore. Really interesting as well, of course, given SoftBank has majority ownership of ARM, based in Cambridge. This company, Graphcore, based in Bristol. So see if there will be some interlinkages there if indeed this deal comes to pass. But we know this company, which is backed by the likes of Sequoia and Samsung, has struggled in terms of the financing. It once touted itself as a competitor to NVIDIA. So this is pretty intriguing on a number of fronts. Once again, another UK asset being eyed by either US, but this time Japan, in terms of potential value. And we'll see how it ties into SoftBank's portfolio, if indeed, of course, it comes through. There have been big question marks around Graphcore for a long time.
If they had a better owner? Is that...
Well, the financing issue becomes...
Right.
Mute, doesn't it, essentially? Because you have the deep pockets of SoftBank, and then if you get a combination, if you're able to integrate Graphcore, maybe that's the plan. You integrate Graphcore into ARM. They do very different things.
That's what I was wondering. Yeah.
But maybe there's the add-on there. So there's the synchronies potentially. How they synchronise those two, the cost savings, the efficiencies, but of course the financial backing. Most importantly, this is a very R&D intensive, capital intensive industry. Graphcore trying to break into the chip space around AI. If they had the backing of SoftBank's deep pockets, that could really change the fortunes, of course, of that company and become a real prospect. But again, it raises a question mark around the UK's own ability to build out its own infrastructure, indigenous. We're currently failing to do that in a real and meaningful way.
Which is interesting because London is seen as Cambridge, etc., seen as a real kind of one of the few nodes in the world where AI is really kind of being seen as being very strong. And that takes us to your DeepMind conversation.
Yeah, and this is another homegrown story, of course, but once again bought out by the US, because it was DeepMind, of course, that was set up here. And I'm going to be speaking and have been speaking to the Google DeepMind CEO, Demis Hassabis. He is a pioneer in the world of AI, sits alongside Sam Altman in terms of his influence in the space. That conversation will start to play, that exclusive interview, 4 p.m. UK time. Coming up, high manufacturing costs hit a luxury car maker BMW in the first quarter. Back to that German industrial story. Then we take a look at the earnings in the auto sector. That is next. This is Bloomberg.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Let's get back to the earnings story. BMW shares slumping this morning, down 4.2% after earnings declined in the first quarter. Rising manufacturing costs weighing on the luxury car makers' profitability. Let's break it down with Bloomberg's Craig Trudell. Craig, it seems that this is more about the manufacturing costs than the health of the European consumer that we've been discussing throughout the morning.
Yeah, I think sales have actually been sort of pretty resilient in Europe and for BMW in particular. I think in addition to the manufacturing costs that you flagged, the weakness in China is notable. I think a 4.1% decline in the quarter for BMW in China for the main brand. I think that's something that we're seeing really sort of universally at this point, where if you're an international car company in China, you're not seeing the growth that you became accustomed to over decades. It's really tough sledding there.
What's the story on Toyota? World's biggest car maker. They've had some challenges, a scandal, output has been reduced. What are the top lines coming through from that company?
Yeah, I think in terms of the outlook, this is a company that is very consistently extremely conservative in the numbers that they set. So it's a company that, you know, is only, and I say sort of tongue-in-cheek, only going to make 4.3 trillion yen this year in profit. And I think we can sort of, you know, pretty reliably count on them to exceed that just based on past precedent. A record 5.4 trillion in operating profit this past fiscal year. I think they're going to be fine. I think one of the things that stood out for me in their outlook is electrified vehicle sales were 37.4% of their total for this past fiscal year. They're seeing 46.4% this fiscal year. Obviously, electrified includes hybrid, but you know they're coming up on half and half actually, you know, hybrid and EVs,
which they were critiqued for, and now they're benefiting for.
Hugely benefiting from hybrids making a comeback.
10 seconds, no beating a race from Ferrari. Why not?
I think it's a case of tough sledding again in China, where you're seeing actually a 20% deliveries drop in the first quarter. They and Porsche both flagging that as a weakness.
Nice new cars from Ferrari, though. We'll see what happens with those. Craig, yeah, they do look good. Okay, coming up, we're going to talk to the CFO of Continental. That's next. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more
I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Markets Day, 30 minutes into the European trading day, and we have a decision coming through from Sweden's Riksbank, the central bank then, cutting its policy rate to 3.75%, in line with the estimates then, and it seems that the importance of addressing the economic decline in that country is outweighing concerns about weakness in the currency. 4 straight quarters of shrinking growth for Sweden. They are cutting rates. The first time this century they've gone ahead of the ECB and the Fed in terms of moving rates lower. 3.75% is a 25 basis point move from the Riksbank guide.
So the currency has been recovering recently. There's been this kind of expectation that we were maybe seeing that continuing because the Riksbank was likely to go maybe more in line with the ECB. The fact that it's front-running the ECB represents to a certain extent quite a significant risk. How far in advance are they prepared to go? Let's say you get a June cut and then you don't get much beyond it. Kind of how does the Riksbank manage that? At the moment, you can see the currency is certainly weakening on the back of this euro, Swedish krona. As you can see, the beginning of a move there, certainly seeing a weaker Swedish krona. And as I say, it has been starting to maybe gather a little bit of steam recently. And this goes to the question, the Bank of England's got to face a similar question. How far in advance could it be prepared to, for instance, front-run the Fed?
Yeah, and you've seen the bearish bets on the pound. Look, the bigger picture about the krona is it's the worst among its G10 peers against the euro. It's been down, I think, about 1.5% against the euro since the March meeting. And if you look at the data, services firms' pricing plans still point to ongoing pressure. So the data, as everywhere else, doesn't all point in the same direction.
What it does for inflation as well would have been debated, no doubt. And again, 2/3 of economists had expected this move lower. It was not consensus. It was a very live meeting. They've gone with a move lower. There's going to be concern maybe about that pressure coming through. Guy was pointing out it's stabilised a little bit, the krona. Down 0.3% versus the euro right now. What does it do to the inflation dynamics for Sweden, which again is facing that constriction across its economy? And getting back to your point, to what extent is this a canary in the coal mine then for central banks the Fed in terms of their confidence to go?
They feel they've got to do it. They feel the economic data is of sufficient magnitude on the downside that they feel that they have to make this move. It's interesting, you're already starting to see a pickup in the housing market, but it implies that Europe has confidence that its data is sufficiently dismal, I'm going to use that word, to justify some kind of a move here. Sweden has been Sweden has been at the forefront of the rate hiking cycle in Europe. It probably did so more aggressively than others. It had a bigger inflation problem that it needed to manage. On the downside, does that become symmetrical? The Riksbank says policy rate expected to be cut 2 more times in the second half of the year. So this is not a one and done. And again, the fact that they're committing themselves to that when the ECB is only maybe committing itself to June, I find fascinating.
Yeah, that's really interesting forward guidance. It'll be interesting to see whether the Bank of England matches that sort of clarity.
What do you think? She laughs
the
politely.
The unreliable boyfriend, I wonder whether he'll give us that sort of clarity.
And I wonder whether they can give that kind of clarity at the moment. The data story in Sweden, in the Eurozone, may be easier to understand than maybe it is out of the UK, and certainly more than it is certainly easier to understand than it is out of the United States. I find they are committing. This is quite a significant commitment. Policy rate expected to be cut 2 more times in the second half. So that's 75 basis points of cuts coming through.
In total, it gets you to 3.25% then at the end of the second half, and that clear guidance coming through from the Riksbank.
In a world where other central banks are struggling to get clarity.
Are they seeing certainty and clarity on the data front that we're not seeing from the central bank? Because to your point, is there now divergence in terms of the data flow coming through for Europe versus what we're seeing in the US? We heard from Andrew Bailey at the IMF saying, I'm pretty convinced, essentially paraphrasing, that the inflation dynamics in Europe have diverged, are in a very different space to those in the US. Are we getting a clearer differentiation?
I think you probably are. I also think you're getting a clearer differentiation within Europe. We spent a lot of this morning talking about the weakness in Germany. Sweden is an industrial economy in the same way you could argue that Germany is, and has faced, therefore, some of the similar difficulties that we've been struggling with in Germany. And that takes us to our next guest. Let's talk about what is happening in the German industrial heartland, what's happening in the auto space. We're going to do that in a minute. Miscommunication. We're going to talk to the CFO of Continental in just a few minutes' time. I thought she was ready. She's not, but we'll get her ready, and then we'll come back to it. We'll do that in just a moment. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around prevention.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back. Now, Continental is sticking with its financial targets for this year. That's despite, of course, a rough first quarter for the German auto supplier, marred by stagnant demand and stubbornly high operating costs. A story for the broader sector as well. Very pleased to say we're now joined by Continental's CFO, Katia Garcia Villa, on the details around the earnings story. Katia, thanks for joining us. An analyst from Jefferies saying there is a lot of work to do in the remaining 3 quarters to reach those targets. How do you plan to meet the targets that you've reiterated today for the full year?
Yeah, thank you very much, Tom. Thank you very much for having me here today. I think we are pretty much sticking to the plan that we've laid out during our Capital Markets Day. So during the course of the next few quarters, the measures that we have already decided on will be kicking in. They will be accompanied by results from the price renegotiations that we are doing with our customers at the moment. And we also expect during the course of the year to grow above the normal market growth, which will also help us and give us some more support for the rest of the year. This is why we are still, and we are confirming our outlook for this year, and we expect earnings to improve as the year progresses now.
On the growth outlook, which parts of the business, or at least which regions, are looking stronger, and where is the weakness coming through? Which regions are looking most challenged?
Well, in the first quarter, we were for sure pretty much challenged by the weakness, general weakness in the European market. That was one of the reasons. Another reason was an unfavorable product mix coming from ramp-ups and ramp-downs in the North American market and in the Chinese market. We have not the same content with those that have grown over proportionally in the first quarter this year. But nevertheless, we do see also progress in that area. Now, we had strong order intakes with Chinese OEMs. We've just published a press release saying that we will supply a new ultra-high performance compute, so a central nervous system for the car to a Chinese automotive supplier. So all that will help us now to reach the targets that we've laid out for this year, also on the sales side, and that will help us now to grow continuously and deliver on our promises.
Katja, good morning. It's Lizzie. You've talked about the price negotiations. Are you facing more pressure from customers in Europe or in China to negotiate prices?
I think this is nothing that you can answer in a general way. So every customer has its own dynamics. We also have different situations with the one or the other customer. What I can tell you is that we are in partnership negotiations with all our customers at the moment. We've had quite success during the course of the last years when it came to price negotiations, and also when you look at the record order intake that we were able to place with the technologies that we bring to the table, despite the fact that we had to renegotiate prices. I think this is also a very strong sign that the customers trust us, trust the technologies that we bring to the table, and consider us to be a really relevant and strategic player for them when it comes to future safe, comfortable, automated mobility.
And when it comes to cost cutting, let's talk about your labour costs. Have German employees become too expensive for German companies to stay competitive?
We are a global company, Lizzie, so we are not only operating in Germany, we are operating worldwide. We do have the largest employee population in Germany, but we also do have some other very strong countries that we are facing. Labor cost inflation is something that we're not only facing in Germany, but that we are facing worldwide. And all the measures that we have taken now to improve our performance and also to improve our operational excellence are not only targeting to the German market, but they are targeting to improve us worldwide and to bring us into a more competitive position.
Katja, good morning. It's Guy. Does it feel like we are heading, though, for a differentiated global markets? You're going to have the China manufacturers operating in China and maybe some other markets, and Western manufacturers operating in their own markets. Are we seeing a divide in the global car market in a way that we haven't maybe for decades?
Looking at the whole dynamic that is currently in the market, I would not confirm that at the moment. We do see that there's also the drive of Chinese suppliers that are thinking about building new production facilities also in other areas of the world. And we, as a strong supplier in the Chinese market, will be happy to also serve those customers worldwide. While on the other side, we do have really strong European or American players also in the Chinese market with certain products. So I don't think that we will see a total differentiation of the market. We will see relevant players everywhere, and we as a global supplier with a global supply base in the world will be happy to support our customers worldwide.
Do you think we're going to see a different speed in terms of the move towards autonomy? China feels like it's moving maybe much more aggressively. Western markets feel, again, more cautious when it comes to autonomy. Do you think when it comes to autonomous driving, where is the leadership currently?
I think this is also a difficult question to answer, like in a very broad and general way. When we look at autonomous driving, for example, and we've spoken about the project quite openly already, we are working together with Aurora to bring fully automated driving trucks to US roads already in 2027. I think this will be a great achievement and a great approach, and the business case is also very attractive for our customers to go into this direction. The technical design is more or less done by now, and we're now already have trucks on the road driving and testing, and I'm very positive that this will be a big step forward, especially on the truck side, and this will take place in the US market.
Katja, before we let you go, can you give us an update on potential divestment plans? I know this is something you and the team have been scrutinising. Anything on that front, and any updates on what more you can do on the cost front?
So I think in principle there are no special updates. We have announced at the Capital Market Day that we do legal carve-outs for two major businesses in Continental at the moment. One is our user experience business on automotive. The other one is our original equipment solutions business in ContiTech. Both carve-outs are running according to plan, and we will take decisions on the strategic next steps as soon as we are ready to do so, and then we will also communicate it to the market. On the cost side, I think we've been very vocal at the Capital Markets Day, but also later on this year, that we are doing a lot to improve our operational excellence in that arena, getting down administrative costs, also improving the R&D efficiency. Both programs are running according to plan, and we will also expect to see first impacts already in the second half of this year.
Katja, thank you very much indeed for the time. We really greatly appreciate it. Continental CFO Katja Garcia-Villa, thank you very much indeed. I want to take you back to the rate story, the Riksbank. First rate cut since 2016. It was at 4%, it's now at 3.75. Let's talk about also the fact that the Riksbank seems to be committing or expecting to be cutting rates twice more in the second half of this year. Matthias Persson, Chief Economist and Global Head of Macro Research at Swedbank, is the perfect person to talk to about this. Matthias, you're probably not surprised we're seeing the rate cut, but I'm wondering what your reaction is to the fact that the Riksbank is committing to two more rate cuts this year.
I think it was a great decision by the Executive Board and the Riksbank to actually lower policy rate. We have had that in our call for some time. And I'm not surprised, actually, that they are saying that there will be two more rate cuts this year if inflation developments is going according to plan. That was communicated already in the last monetary policy report, and they have changed the way they communicate. They have decided to stick much more to the short term, and in particular, that included 3 rate cuts this year. We actually think there will be one more, but I think it was a good decision, and then I think it's good that they signal very clearly how they see the developments going forward.
Yeah. Why is this central bank able to deliver that level of certainty and that degree of rate cutting when other central banks, the Fed in particular, but to a certain extent the ECB, the Bank of England as well, are being much more cautious?
I think monetary policy and the lacks of monetary policy is much faster and much stronger in Sweden. As you know, we have a lot of debt in the private sector, in particular for mortgages. And most of us like variable mortgage rates. And that means that monetary policy has a big impact and very quick impact. So if you look at the inflation trend since January this year, it has been completely different from the developments in the US and in Euro area. Much sharper and quicker turnaround, and inflation coming down much faster. So I think monetary policy, the lags, all of that is important. In monetary policy has a bigger impact in Sweden than compared to the US or Euro area, for example.
And yeah, you're very optimistic about the Swedish economy. How much faster do you expect it to grow than the rest of Europe?
Yeah, in particular next year. So we think that in midsummer, which will be end of June this year, from that we expect consumption to gradually increase. Next year we will have expansionary fiscal policy as well. Remember, we have a very low debt to GDP for Sweden. It's roughly above 30%. The Minister of Finance has been very clear. She will be much more expansionary with tax cuts next year. And together with more cuts from the central bank, we expect the Swedish economy to grow 3% almost next year, double the growth rate that we have for the euro area. And that also speaks in favor of the Swedish krona strengthening going forward.
But you have seen the krona dropping off the back of this decision to cut and the guidance for 2 more cuts this year. How worried are you about krona weakness feeding into the inflation story again?
I'm not super worried about that, actually. When we looked at our forecast for inflation, and we are more worried that inflation is actually going to be below the target from summer and onwards. And actually, you know, the krona needs to be at roughly 11.85 to the euro for the average of next year in overall in our forecast for inflation to be at the target. So I'm much more concerned looking forward that inflation will actually undershoot.
Mattis, I'm still stuck on your debt to GDP data point. I didn't know that about Sweden. 30% debt to GDP. That's pretty enviable, isn't it? Sitting here in the UK with 85% or thereabouts. Mattis, so that's really interesting in terms of the fiscal impulse that could come through for Sweden next year and that 3% picture you see on growth. When it comes to the real estate market that we know has struggled in this higher rate environment with the debt load there, what that means for households, are we past? Is that it then? Can we put that in the rear view mirror, given that rates are going lower?
It's starting to improve already. Actually, we have seen flats and houses already starting to increase slightly. We expect house prices to be at the bottom and actually grow some 2 to 3% this year with house prices going up. Next year, we expect 5%. So activity has picked up. If we then turn to commercial real estate, which has also been on international media, we have not been as concerned for that being a financial stability risk for the Swedish economy. Yes, there has been concern for individual companies, but not for the market as a whole. So I think with this cut, we will see a turnaround and improvements both for commercial real estates and also for the housing market. So yes, it is turning around.
If the Fed doesn't cut this year, is this decision going to come back to bite them?
No, I don't think so. But I think Fed will impact both the Riksbank and the ECB, but it's more on how many cuts we will see and how gradual and when we will see the cuts. So we are thinking about the Riksbank. We think September, probably the next cut. They want to see what ECB is doing, probably also what's happening with the Fed. And then we have late cuts for the Riksbank this year, so November, December. And hopefully we think that the Riksbank will have some more clarity when it comes to both the ECB and the Federal Reserve at that time.
Matthias, what does this mean for Swedish industry? We spent a lot of this morning talking about German industry and the fact that it is struggling right now. Many of the German industrials that we're talking to are talking about a recovery in the second half. To a certain extent, that feels premised on the idea that we're going to see rate cuts from the ECB. If we see rate cuts coming through from the Riksbank, is that an early test about how Swedish industry is going to recover? What do you expect to see in terms of the industrial numbers?
That's a good question. I think we have had a two-tiered system here in Sweden. So the domestic market, retail, everything oriented to the Swedish domestic market has been struggling. You know, durable goods, cars, boats, all of that. But our export sector has actually been growing, all of them, probably helped by the weak krona, but also the fact that we have some good producers that produce goods that have a great demand still. You know, think about greening of the economy. We have some good export-oriented companies in that. Of course, also in defense. And if you look at what is the most important export market for the Swedish economy right now, it is actually the US, both for services and goods. So with US growing above expectation, that has also supported the Swedish economy. So I'm quite optimistic now that the domestic market, with this first rate cut, more to come, and also, you know, what should be remembered is that inflation coming down is very important. It means that real wages will increase, so consumers can feel a bit more wealthy, and that's why we think that the domestic market also gonna take off.
Okay, so a bright picture in terms of the order outlook as well, the demand outlook for some of those key import nations, the US, of these Swedish goods. Do you have, does Sweden have the labour force to match that demand?
That's a very good question. I think, you know, the labour market is tight in Sweden. Even if we have seen some weakness in the labour market, and we expect labour market to deteriorate somewhat more during this year, I think what we hear, meeting customers and also from surveys being done on Swedish economy, corporates are hoarding the labour. So I am a bit concerned, maybe not for this year, but maybe more long term. With, I think there will be more infrastructure investments and so on in Sweden, partly because of NATO and also other defense investments that probably needs to be done. There, I think maybe we need to think about the labour. So we need to do much more for improving the functioning of the Swedish labour market.
Okay, Matthias Persson, Chief Economist at Swedbank. Great to have you on the programme. Of course, you were one of the people who predicted that cut that came today. Not everybody did, but not everybody indeed saw the expectation of 2 more cuts telegraphed from the Riksbank this morning. We thank you for joining us. But it's not the only thing that's on the agenda today. There's plenty more to look out for. At 12 p.m. London time, US MBA mortgage approvals are on the docket. Then at 5:30 p.m. London time, it's Brazil's monetary policy decision. Brazil's central bank has become, of course, increasingly dovish under Lula. Then at 6 p.m. UK time, we have a US 10-year auction of $42 billion. And we have China's President Xi Jinping continuing his trip in Europe, as we were discussing. Then later, we have US earnings, including Arm, Uber, Airbnb and Robinhood. And finally, through the day, we have central bank policymakers chipping in with their thoughts from the ECB and the Fed at various different events.
The market's turned around a little bit, up 0.3%. Guy's not convinced, but you're seeing the gains there, up 3% on the European Stock 600. Even the US futures are edging into positive territory, and given that we've had 4 straight days of gains for S&P, maybe that's not something to be sniffed at. It's borderline, of course, in terms of the US story and the futures picture, but you're seeing a little bit of upside, Guy.
Keeping on the 5,200 level. So yesterday it turned out to be a really big line in the sand for the S&P. I think if you can break through that convincingly, it'll be interesting to see where the markets go. But if it turns out to be a ceiling, that could be quite interesting.
5,200 as a floor or as a ceiling for the S&P.
We'll see. We'll see how the market trades around that. We're going to go away. We're going to have a coffee. Lizzie's going to go away. Write extensive notes on the Bank of England for tomorrow.
That's true.
That's a big one. I wonder. I mean, let's not talk more about Sweden. I think we've done that one justice. But we can move from the Riksbank then to the BOE and set us out. Well, exactly.
What do you think?
Is that kind of move factored in?
SMB, Riksbank.
Yeah.
Could the BOE be next? At least could we see more dovish voters this time? Dave Ramsden, I'm looking at you.
Okay, so what do you think? Do you think it turns more dovish? The inflation story here still feels much more sticky than it feels like it is elsewhere. And the government in so many ways is aiding and abetting that by pushing up the minimum wage, all these kind of other factors. You look at what's happening in the service sector, feels still sticky, the story there.
Depends which data you look at. As I say, you've got that hawkish triumvirate at the end, but really look at the dovish end to see whether you get more. That could be a signal for the future if they don't cut this time.
Okay. That's for tomorrow. What else we got coming up? We've got Wayne Griffiths, the CEO of SEAT, coming up. Looking forward to that conversation. And Demis Hassabis, the CEO of DeepMind. That is a conversation I'm looking forward to hearing. Tom's already done that interview. I'm very much looking forward to it playing out at 4 p.m. All of that is coming up here on Bloomberg. I'm going to hand you over to Francine Lacroix. The Pulse is next. This is Bloomberg.
Let's talk about
names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that...
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The U.S. pauses a shipment of bombs to Israel over concerns about damage to urban areas as Israel inches into Rafah. Siemens Energy and brewing giant AB InBev surge after strong results as global stocks continue to stage a comeback. Plus, the U.S. revokes licenses allowing Huawei to buy chips from Qualcomm and Intel as Washington tightens curbs against the Chinese phone maker. So first thing is first, let's take a look at the European markets map. It has been a pretty strong week, actually, so far in terms of earnings, and it's very clear that equities are enjoying that. So they're all ticking higher. We had some strong company reports. Also, traders, of course, seeking some of the evidence of earnings recovery before taking this month's rally further. The dollar's gaining, and of course, what's also been supporting a lot of these equities is what we've seen really the prospects of Fed rate cuts. And again, the pace of advance seems to be easing, and that's in general pretty equity supportive. Now, we'll continue watching markets very closely, but really our main story is what's happening on the ground in the Middle East. The U.S. paused a shipment of bombs to Israel last week over concerns about plans for a full-scale assault on Rafah. Meanwhile, Israeli forces are edging closer to the city in southern Gaza, with truce talks stalling. Now, Washington says Israel and Hamas should be able to resolve their differences over a proposed ceasefire. We're now joined by Rosalind Matheson, Bloomberg's EMEA news director. So, Ros, what's the latest that we know of?
Well, we know that the US has paused this shipment, and these are bigger bombs, heavy bombs that could do damage potentially in highly densely populated areas. And the US concern there very much is those bombs could end up being used in Gaza, particularly in Rafah. So it's a pretty symbolic move from the US. It's not unprecedented, but they're certainly sending a further signal of their concern about what a Rafah offensive might look like and the potential risk to civilians in the area. They are saying they're going to proceed with the rest of their aid shipments, their military aid that recently agreed significantly large package that includes stuff that will help Israel with its own defense. So, for example, supporting the Iron Dome missile shield and so on. So they're not pulling away for military support for Israel as a whole, but they're sending a message to Israel with this particular pause in sending them these heavier bombs. And that really is that level of concern that we're seeing Israel edge forward, move forward bit by bit towards that fully fledged Rafah offensive. We've seen them move in to take control of the Rafah crossing into Egypt. We've seen, airstrikes going on in the eastern part of Rafah. We're seeing further activity on that front this morning. So we are getting bit by bit towards that full offensive. Perhaps it will be a slow walk towards there, but it's coming either way. And so the US is really concerned about that and certainly doesn't want its big bombs being used.
Ros, how difficult is it to understand what civilians are doing right now, where they can go to? It's very difficult, of course, to track because of the limited access to the area.
It's very difficult to tell. We do see some satellite imagery which shows that tents are being set up further north from that area in eastern Rafah. We can see some initial signs of movement of people, but it's really difficult to tell the size of that, the number of people who might be relocating. And obviously, either way, it's going to be a very, very slow process. They're not compelling people to leave. Israel is encouraging people to leave and saying they suggest they move north out of harm's way. And that's only from one section of Rafah at the moment. Do you get to the point where they're going to tell everybody in Rafah city itself to leave? And that's more like 1 million people, and you can't move 1 million people in a hurry. So the suggestion is that we're not going to get to a full-fledged Rafah offensive in a matter of days. It could, in fact, be weeks.
Rosalind, thank you so much. Ros Matheson there, Bloomberg's EMEA news director, of course, on the latest on the ground. Now, European stocks have been staging a comeback so far this month. Traders on the lookout for firm evidence of an earnings recovery before taking the rally further. Well, joining us now is Natalia Lipikina, head of EMEA equity strategy at JP Morgan Private Bank. Also with us is Justina Lee. So thank you both for joining us. Natalia, welcome to the Pulse. Delighted to have you here today, especially on such an important day for earnings. It seems a lot of them are actually better than expected. It's like an earnings recovery, and that's filtering through to equities.
Yeah, absolutely. Thank you. Very excited to be here. Coming to this year, we were actually very positive on the equity markets, and the reason for that was the rolling earnings recovery. We think that earnings are bottoming here in Europe, and they're recovering in the second half of this year, and same for the US. We think that earnings are likely to recover from here. When we look into the beats and in general what different sectors are doing, in the US, we're actually seeing that 11 sectors are having beats, and they're posting better than expected earnings growth. That is definitely posing some optimism in the markets. And in Europe, even though some companies don't really raise guidance, we're really seeing that market is expected the growth to accelerate from the second half of this year.
And Natalia, is this quality growth? Is it cost cuts, or is it actually that they're growing in the right business, and this is thanks to a growing economy?
Yeah, exactly. If you look into for example, last year, the story was predominantly driven by tech. Right now, we're seeing the broadening of that performance, especially from the earnings perspective, which is crucial to the market because this is exactly what the markets wanted to see. The market wanted to see that earnings in different sectors, not just tech, are delivering. And we believe that we're going from the rolling earnings recession concept to the rolling earnings recovery. So if you look into COVID times, COVID created a bit of instability and a bit of deceleration in many sectors at a different time. So you really did not see it at the index level, but now you're seeing that a lot of sectors are done with the normalization post-COVID and now re-accelerating from here.
And Justine, also what's supporting this is, of course, I know expectations for the Fed are all over the place, but now we're maybe expecting more cuts than even 2 weeks ago. And then we also in Europe had already 2 cuts and are expecting more maybe from the ECB in June.
Right, exactly. I think in Europe, people are already looking ahead that maybe the economy will get a bit of support from the rate cuts. In the U.S., it's sort of an interesting picture because if you look at the jobs data, but also some of the other prints, it would seem like there might even be some stagflationary worry, shall we say. And I think that kind of really is confusing people at the moment. And I think that's because a lot of the underlying drivers on inflation right now are not entirely just about, demand. For instance, like Neil Kashkari kind of highlighted the lack of progress on housing costs in particular. And some of that is about supply. And so that kind of raises the question of, what should monetary policy do about that?
And just, here's Neil Kashkari, who we spoke to yesterday.
I think the most likely scenario is where we are right now, which is just we stay put for an extended period of time until we get clarity on, is disinflation in fact continuing, or has it in fact stalled out? I don't think we know the answer to that, so I would say the most likely scenario is we sit here for an extended period of time.
So just, what does sitting here for an extended period of time look like for the markets?
Yeah, I think kind of what he is highlighting here is that it could be that the neutral rate of interest, where kind of the economy is neither expanding nor shrinking. I mean, it could actually be higher than what markets are expecting. But I think, for a long time, markets have really enjoyed this Goldilocks scenario where actually growth is kind of pretty strong, which is keeping solid earnings. But at the same time, maybe the Fed is at least not hiking yet. And I think that could still be a pretty good balance kind of for the markets as well.
Natalia, it does seem that U.S. tech companies have gotten so much attention that there's a risk, I guess, that they're sucking a lot of the oxygen out there. How do you play some of, the opportunities in Europe?
Yeah, absolutely. If you look into tech, we actually continue to like tech. There is a lot of things to like in tech, especially driven by artificial intelligence. But then when you look into more cyclical areas in the market, we actually like companies in Europe, in Japan, and US mid-stocks. So in Europe, we tend to focus on the largest European companies. So think about, we call them European national champions. So companies in luxury space, companies in industrials, as well as tech, because they benefit from this huge capex that is happening in the artificial intelligence space right now.
So interesting, and we'll get back actually to some of your thoughts also on Japan right now. Bloomberg's Justina Lee, thank you so much for joining us and staying with us. And Natalia Lipikina, head of EMEA Equity Strategy at JP Morgan Private Bank. Now, a couple of things we need to update you on. For example, Reddit shares jumping after improvements to the social media platform's advertising system helped push quarterly sales higher than expected in its first results as a public company. So you can see Reddit pre-market gaining some 13.7%. We'll have plenty more up next. This is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice, saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. Go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Welcome back, everyone. Now, we're just getting some official data from Apple. China iPhone shipments have climbed 12% in March. Interesting that pre-market Apple is actually getting some 0.4%. There had been, of course, concern about some of that market, as also some of the customers or consumers actually in China were trading down or actually getting more local products. Now, still with us to talk about the markets, Natalia Lipikina, head of EMEA Equity Strategy at JP Morgan Private Bank. Natalia, thanks so much for sticking around. Now, we're talking a little bit about some of the earnings season that in many cases was better than expected. What are companies actually doing with that excess cash? Are they reinvesting or giving dividends and back to shareholders?
I think what was really the most interesting part of the earnings season last week was the $200 billion capex spent by the US tech companies. It's unprecedented and it's really big. And all of them are in this capex race because of AI. They all want to be ahead of the AI game. But the most interesting part is that it's not just the tech companies that will benefit from it. It's not just semiconductors. That will actually feed through the whole system, especially industrial companies that are exposed to AI, that are also talking about how this capex is already positively impacting their earnings. So we think this is a very, very big theme, not just for this year, for years to come. And AI infrastructure is nowhere near peaking at this point.
And so that also translates in Europe?
Absolutely. There are loads of companies that are actually benefiting from that beyond just big tech companies. We're talking about industrial companies. We're talking about mining companies. All of them have different exposure to data centers and AI.
Natalia, you also mentioned, you're actually overweight on Japanese equities. I mean, Japan, gives us quite a lot of heartbeats because of values in yen and interventions and what the BOJ does next. Is this a longer-term play?
So if you look into the overall economic stability right now in the markets, US is very strong. Unemployment is low, consumer confidence is high. And then if you look at outside the US, economic growth is actually picking up. So that itself is very positive for the cyclical parts of the market. That's our preference for Europe, preference for Japan, and US mid-caps. Japan's story is also quite interesting from the shareholders' perspective, because they're increasing their buybacks, similar to Europe, which I think is still very underappreciated by the markets. And also, Japan is really the region that didn't have inflation for a long time. So seeing a bit of inflation in that region is very positive and something that investors are looking for.
Yeah, which is maybe why a bit of yen weakness is not to be snubbed out at. Thank you so much for joining us, Natalia, today. Natalia Lipikina there from JP Morgan Private Bank, going through some of their top plays, including Japan, but also US. Coming up, our exclusive interview with the chief executive of the Spanish car brands, Seat and Cupra. That's next, and this is Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Now, Siemens Energy raised its outlook for the year and said it would cut jobs and output at its troubled wind turbine business. Also, looking at AB InBev, the world's largest brewer, said revenue in North America fell 9.1% in the first quarter, and that's less than expected. And then BMW down 3%. Earnings actually fell in the first quarter after rising manufacturing costs weighed on the luxury car makers' profitability. So automakers are dialing back their EV ambitions after a few years of surging growth, with orders slowing due to disappearing subsidies, a lack of charging infrastructure, and high EV prices. At the same time, Chinese rivals and Tesla are exposing competitive weakness at Europe's biggest car makers, an issue which has been front and center during President Xi's visit to the continent this week. While Spanish car brands Seat and Cupra are investing heavily in EVs, but the company's chief executive has warned the local market is too small. Well, we're delighted to be joined by Wayne Griffiths. He is the chief executive of Seat and Cupra. So thank you so much, Wayne, for joining us here in the studio. I mean, you have a big job. And you're spending about 3 billion euros to electrify this factory in Montreal. Is that tough? You've never done this. Like, what's your biggest challenge in that?
Yeah, the 3 billion is in our factory, but the whole investment's a lot bigger. Our ambition is to electrify Spain. We're investing as the Volkswagen Group in Spain, 10 billion euros. This is an historic investment in the history of Spain, if you like. And it involves not only electrifying our plant in Montreal, but also Pamplona, and building a gigafactory for batteries in Valencia. So it's a real game changer.
I mean, it's quite difficult because you can't, if you had delayed it, people would probably have said, well, why'd you delay it? We need electrification. Mm-hmm. But it's also a tough environment out there because of the Chinese EVs and lack of subsidies. Do you worry that you were a little bit too quick to push this all-integrated battery supply chain?
No, I don't think there's any point in questioning the objective. We need to get to zero emissions as fast as we can, no? And the European Union has set an objective by 2035 of getting to zero emissions. So I think what we have to do now is try and speed up. We're doing our homework, we're doing our part, we're getting the cars ready. Also cars that are accessible for the masses in terms of pricing. So cars from 25,000 euros, small urban city cars, fully electrified for the Volkswagen Group in Spain. And also cars with autonomy and range, so 400 or 500 kilometers. So I think we need to speed up. There is more competition, particularly from the US and China, and I think Europe really needs to, start to pull together and speed up.
I mean, for the specific plant, I know there was a pushback also from locals, right, in trying to build it. Are you confident that the plans will go ahead, or will it be delayed?
No, there's no going back for us. We start to build cars from next year, 2025 onwards. We're building a battery assembly plant at the moment. That will be with a 300 million investment. That will be ready at the end of this year. So we start ramping up next year. And like I say, there is no plan B for us. All we need now is more support from the Spanish government in particular to accelerate the sales of electric vehicles, particularly in our home market.
If you look at the cell factory, I mean, again, this is all trade, right? And the fact that some supplies have maybe been delayed, that the supply chain is a lot more difficult than maybe it was 4 or 5 years ago. Do you have the right supply chain in place? Like, are all the components, will they be on time?
Yeah, all the components will be on time because we have our own battery cell factory in Valencia that will deliver cells to us. We have the ability to assemble the battery ourselves. So I'm quite confident that we will have everything in place from our side, from a manufacturer side. Now we need to have the market there, the demand there, and also the charging infrastructure ready.
So what will make a difference actually to have that demand and that market there?
I think we need to give the consumers a reason to buy electric cars. First of all, they need to know it's part of the solution for the future. And not have doubts around technology. Is the electric car the solution? We need to get rid of those doubts. And we need the governments to back that as well, not only the Spanish government. And then we need to give the consumers a reason, a motivation, not just a threat or a penalty, you know, that we say you're not going to be allowed to drive a combustion car, but to say why you need to drive an electric car. And give them incentives, incentivize it, make it a smart buy to buy an electric car.
But do you worry about Chinese manufacturers? I mean, they have the full support of the government. There are a lot of them. They can produce cheaper.
I don't worry about them, but I take them seriously. It's increased competition. And, you know, when you are faced with increased competition, you can react in different ways. You can try and defend your position, maintain your position, go into protectionism, or take the challenge and try and be more competitive yourselves. And I think in Europe, that is the challenge we have to take. And we have it in our hands to be, we have a great automotive industry in Europe. We need to protect that, grow that. We could even make it bigger. We have renewable energy. And if we're clever enough to get that renewable energy at competitive prices, I think we could be very competitive against the Chinese, but also the US competitors as well.
But am I right? The Cupra Born is actually made in China and then exported back in Europe.
Yeah, the Cupra Raval will be built from next year in Martorell, together with a Volkswagen model as well, and then other models in Pamplona. So we will be building in Spain, electric vehicles for the Volkswagen Group.
But it's tough. I mean, I guess input prices are much costlier, right? Because labor is more expensive and everything is more expensive in Europe than, for example, in China. So how do you see that stabilizing?
Yeah, the margins are under pressure, particularly at this early phase of electrification. But as I said, we're going to be making electrification with this new range of cars, these small electric vehicles on this new platform for the Volkswagen Group. We're going to make it much more accessible. If you like, we're going to democratize electromobility finally, with cars starting from €25,000, which is the price of the most sold car at the moment in the European market.
So do you think that changes? I mean, again, you know, we talk about escape velocity. At some point, that because enough critical, you know, people have electric cars, and it's the only thing that people will want. How far away are we from that point?
Yeah, the tipping point we said would be 2030. At the moment, it is slowing down, you're right. And what we now need to do is speed up and not talk about 2030 and 2035, but talk about 2024, 2025, set objectives there, binding objectives for the infrastructure, for getting the infrastructure in place. That's one of the reasons a lot of people have their doubts. And at the same time, make sure that the electric car is the best buy in the market for the consumer.
So good to have you here in the studio. Thank you so much for joining us. That was, of course, the Chief Executive of SEAT and Cupra, Wayne Griffiths, joining us this morning. Now, coming up, we discuss the mining sector, including BHP's $39 billion bid for Anglo American. Our interview with the Chief Executive of the FTSE engineering firm, the Weir Group. That's coming up next, and this is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Well, the U.S. pauses a shipment of bombs to Israel over concerns about damage to urban areas as Israel inches into Rafah. Siemens Energy and brewing giant AB InBev surge after strong results as global stocks continue to stage a comeback. Plus, the U.S. revokes licenses allowing Huawei to buy chips from Qualcomm and Intel as Washington tightens curbs against the Chinese phone maker. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Minneapolis Fed President Neel Kashkari thinks it's likely that the U.S. Central Bank will hold rates until officials are confident that inflation is under control. Speaking with Bloomberg TV at the Milken Institute Global Conference, Kashkari said the Fed will do what's needed to hit the 2% target.
The second half of 2023 surprised us at how rapidly inflation fell. That was really good news, and the economy remained strong. We all hoped that was going to continue. The first quarter of this year, it seems like it stalled out. So it's a little too soon to declare that we're definitely stalled out, or maybe it's just taking more time. I think we're in a good place right now. Labor market is still strong. We can take our time to get more data to see if disinflation is going to continue. And if it does, great. If it doesn't, then we need to take that on board.
What is the complexion right now of disinflation? What actually drove us, at least down to the level where we're at right now?
Most of the gains that we saw last year were supply side improvements. Supply chains getting better, Americans coming back to work, a lot more workers entering the labor force. That's really positive. I don't think monetary policy actually brought demand down that much. And so most of the gains were because of the supply side. Now the question is, if monetary policy has to take us the rest of the way there, is it tight enough to do that? I wrote an essay today on our website raising that question. And I'm not sure how tight monetary policy is. We need more data to assess it.
How do we know that the disinflationary process has still some ways to go? Or how do we know that maybe this is it? This is the new normal?
Well, it's not the new normal because it's 3%, and the Fed can and will achieve 2%. The question is, if disinflation is still underway, then maybe it'll continue on its own, and we can then take that on board. If we need to hold rates where they are for an extended period of time to tap the brakes on the economy, or if we even needed to raise, we would do what we need to do to get inflation back down.
I have to just ask you, though, about 2%. And I know why the Fed stands by that 2%. But I talked to people around the room this week here, and their cost of capital, they're basing that more on closer to a 3% rate. And the idea is they're saying, look, the 2% target, that needs to come up. That's not the reality long-term structurally, at least not for the folks in this room.
Yeah, I disagree with that. Yeah. I mean, I think that ultimately the central bank, whether it's the Fed or the ECB or the Bank of England, can determine whatever the inflation rate is. And over time, if they conduct their policy appropriately, people will come to understand that, will adjust their behavior. We're committed to 2%. We will get to 2%, and we will get an interest rate environment necessary in order to achieve 2%.
Well, the dollar gained on those hawkish comments by the Fed's Neil Kashkari, of course, putting a pressure on risk assets, including base metals. Now, copper fell below $10,000 a ton, although the metal has rallied around 16% this year on fears of wider deficits, with supply struggling to keep up with growing demand for the energy transition. Now, let's discuss all of this, the outlook for the mining sector, including BHP's $39 billion bid for Anglo-American with John Stanton. He's chief executive of the Weir Group, a FTSE 100 engineering company that provides technology to make mining more efficient and sustainable. So, John, thank you so much for joining us. I mean, you're almost like a proxy of everything that we talk about day in, day out. Commodities, because basically you supply the engineering that enables mining companies to extract what they need from the ground. So, first of all, is there an undercapacity because of lack of investment over the last 10 years?
Yeah, well, good morning, Francine. Thank you for having me. Yes, we have a unique position as a company because we serve more mines around the world than anybody else. So we have literally thousands of people working on all the big mines around the world. So we have a unique view of what is going on across the complex. And it's becoming very clear that for commodities such as copper, which are absolutely critical to underpin the energy transition, there is a looming supply gap. It's difficult to see where that supply gap is going to be filled at this point in time. Existing miners are working very hard to upgrade their brownfield sites and produce more, but we need to do that as well as develop new mines from a greenfield point of view to add to the supply and meet the demand that's coming.
So was it a gross miscalculation, actually, that we were not mining enough? I mean, I remember like 2-3 years ago, Jeff Curry from Goldman Sachs at the time, now at Carlyle, came and gave this explosive interview saying, we're running out of everything. Like, how long does it take us to catch up if we're going to put copper in the things that we need to do the transition?
Yeah, well, there's not enough metal. That's, I call it the elephant in the net zero room, is that there's not going to be enough copper to get to where we want to get to unless we see more production come online. I think that needs our mining customers to do more to accelerate the projects that they have in their pipeline. But I think it also needs governments, particularly in the West, to make a policy response, as we're starting to see a little bit, to help them. The challenges are that, the cost of capital is now very high and the payback on mining investments is so long. And, at the same time, it's taking much, much longer for new mines to get the permitting and the licenses they need to operate. And quite rightly so, there needs to be lots of engagement with local communities in terms of the environmental impact, but that's taking much, much longer in terms of facility.
Inflation, so I imagine people are like putting lingots, if not under their mattress, storing them safely. How do you see the other two basically changing behavior?
Well, I mean, I think, again, the exposure that we have as an organization is that we're very diversified across all of the commodities. Copper, we think, is in a really strong place for the reasons that we've just discussed. I think gold as a store of value has bounced back incredibly strongly. So we're seeing our gold mining customers seeking to invest and accelerate their production, which is positive. There are more nuanced and neutral views maybe on iron ore, but here we think the theme is going to be, as we sort of clean up the steel industry and drive for green steel, then that is going to need higher and higher grades of iron ore. So we see investment, and that means more processing, more engineering, more technology to be deployed to deliver on that. So the only things that have been a little bit choppy recently from our point of view have been nickel and lithium, but from our perspective, that was never going to be a straight line in terms of the growth, and I think we're just going through a correction at the moment, but the long-term secular trend is very positive.
I mean, taking Russia out of the equation, who's a huge steel, producer, how has that changed actually the steel complex?
Well, I think it's not changed very much yet, but there is a lot of investment in hydrogen steel, other forms of green steel, moving from traditional blast furnaces to electric arc and other technologies. So I think that's starting to happen. It needs to happen. Steel is a very, very big emitter of CO2, but it's going to require new technology and it's going to require higher grades of iron ore. both of which are positive for us.
John, one of the other things that we discussed quite a lot on the program is, of course, tariffs, but also the fact that there's been a lot of onshoring of business back to the U.S. And I don't know whether we can talk about deglobalization, but certainly the supply chains seem to be getting much harder. Do you see that in your industry?
Well, we've been very fortunate as far as we've always had a regional, vertically integrated supply chain, because we need to have manufacturing that's close to our customers. They want to know that they've got security of supply. And also we did that because we wanted to keep our intellectual property in-house within our manufacturing footprint. So in a way, the world has come back to our model as it's deglobalized. So I think we're in a good place, and we'll continue to refine our manufacturing footprint, but that's where we are today. I think the deglobalization trend more broadly is quite interesting, because if you think about the supply of metals for the future, in a globalized sort of perfect world where supply and demand were broadly met in a somewhat perfect market, that's going to change. You know, we're going to see more resource nationalism, increasingly countries wanting to know that they've got security of supply, and net, I think that probably means that more capacity is built than in a globalized world rather than less. So again, we feel positive about that.
If BHP Anglo goes through, and it's a big if, and we may have other actors actually wanting to swoop in and buy this asset, how does it change the mining complex?
Well, not for me necessarily to comment on the specifics, but I think M&A that is sort of being mooted at the moment is a positive signal, if you like. It sort of validates the thesis that copper and these other battery metals are going to be important, and it looks like the larger miners want to increase their exposure to that. So I think it's a positive. On the ground, it doesn't really change anything. You know, it's all about the underlying assets, and they need to produce more. They need to become more efficient, more sustainable, and that's where our technology is deployed. More broadly, the M&A may change the ownership of the assets, but we need more assets, and it really doesn't do much to solve that problem.
John, how much do you spend on R&D to make sure that actually some of your equipment is as green as can be?
Well, yeah, since Weir has been through a transformation over the last few years, so we were quite a diversified sort of cyclical conglomerate, and now we're entirely focused on the mining industry, and we did that so we could concentrate our R&D and investment on the new technologies that are going to be needed. Right. You know, very simply put, the mining industry needs to scale up and clean up, and we're going to help them do that through the technologies that we could bring to improve productivity, efficiency, but also meet the increasingly challenging sustainability targets and requirements that our mining customers have.
John, thank you so much for joining us. That was John Stanton, the Chief Executive of Weir Group. Now, coming up, Beijing's relationship with Belgrade blossoms as tensions with Brussels soar. We get the latest on Xi Jinping's warm welcome in Eastern Europe. This is Bloomberg.
The names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that...
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything. From the world of politics to the world of business, Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Well, China's President Xi Jinping has praised his country's ties with Eastern Europe as a boon for the world's second biggest economy as he arrived in Serbia to bolster links with the Balkan nation. Now, for more, we're joined from Warsaw by Bloomberg's Piotr Skolimowski. Piotr, thank you for joining us. So why did Xi actually choose Serbia as part of his visit to Europe?
Obviously, Serbia is the place that has been very favorable to China. China is its biggest source of FDIs. And obviously, we've just been hearing from President Xi and President of Serbia, Mr. Vučić, who said that the sky is the limit for relations between Serbia and China. And obviously, Serbia has been trying to attract a lot of Chinese investments. There's those deep historical ties that go back to this 25th anniversary of the bombing of the Belgrade embassy, of Chinese embassy in Belgrade, that sort of tied both countries, and they've been working very closely together. And obviously, he doesn't expect to get the sort of unpleasant questions about his support for Russia when it comes to war in Ukraine, or the question about flooding EU markets with cheap goods, or so that's sort of as part of his trip. That part is definitely, he's coming to the friendly shores.
So, Piotr, what is he actually then expecting to achieve, apart from avoiding maybe some of the more thorny issues?
Well, obviously, business ties have been very close between the two countries. The two leaders are going to sign about 20 MOUs. Those include various business ties, but also cultural. Already, when we talk about the size of investments, it's 15 billion for both Serbia and Hungary, between China that come from China. And finally, there's also there are lots of investments that already are bearing fruit. Like, for example, in the copper industry, where Chinese have actually transformed a copper miner in Serbia into a major company. And China is also building a huge modern high-speed rail between Budapest and Belgrade, which also kind of shows the impact and the footprint of Chinese investment part of the world.
So interesting. Piotr, thank you so much. I know you'll keep us updated with everything that's going on with the Chinese president. Of course, on the ground, Piotr Skolimowski. Now, Bloomberg has also learned that the U.S. has revoked licenses allowing Huawei to buy semiconductors from Qualcomm and Intel. Now, the move affects U.S. sales of chips for use in Huawei phones and laptops, marking a further tightening of export restrictions against the Chinese telecom equipment maker. Meanwhile, TikTok has sued the U.S. government over a new law that will force its Chinese parent, ByteDance, to divest a popular video app or face a ban across the country. Now, the legal challenge sets up what could be a prolonged court battle, pitting free speech rights against national security interests. Well, let's bring in Bloomberg's Mark Bergen. Mark, I mean, this is fascinating. I also think TikTok actually, I think, was one of the sponsors at the Met Gala, so the timing of this is quite interesting. But what is TikTok actually arguing in this lawsuit?
Yeah, this is the latest twist and turn, and they've been sort of signaling that they're willing to go to the mat on a legal fight. They're arguing that the ban and divestiture is unconstitutional, that it prevents free speech, and that I think they're making a second argument, like kind of less legal one, but maybe more of a political one, that there are 170 million users in the U.S. There's also this big kind of creator economy that TikTok is part of. And they're saying that this not just risks the many users that are using TikTok and a lot of the young users who are out and voting, but also the people who are making a living off of the app.
So what happens to ByteDance if actually TikTok gets shut down in the U.S.?
That's a really good question, one we're kind of looking at very closely. I mean, ByteDance has, this is not, say, the primary property. They have Douyin, which is their sort of TikTok version in China. I think it's just as big and vibrant. And they obviously have, this is sort of a small fraction in the U.S. on the user base, but certainly on the economic and business front, like the U.S., like with all social media, is a dominant market. Their shopping venture, which they're pushing in, competing against Facebook and its properties, that's been having the most traction in the U.S., and that would be a clear hit. So I think this is something that obviously they're wanting to fight as much as possible because it's almost existential for them.
So who would gain from this? I mean, if TikTok had to go away in the U.S., who would benefit? Yeah,
the most immediate benefit here is Meta. If you look at Instagram Reels, it's kind of been called the carbon copy of TikTok. YouTube has its Shorts, which is a TikTok competitor. I mean, that's a very similar product. In some ways, all these platforms are competing for the time of the day, right? There's only a certain number of hours of entertainment information, and so I think Meta and YouTube. Google are probably the biggest beneficiaries of this. But at the same token, like this is not, these companies, especially Google, have been in positions where they're saying we're not a monopoly on antitrust argument, and TikTok has been amazing politically for them to point to this thing that came up in the past seven years that's now directly competing with them. So it's a very useful political tool in many ways that Google probably doesn't want to go away.
Yeah, so interesting. I know we'll talk about this so much more. Thank you so much for joining us. That is Mark Bergen, of course, following this very closely. Now, former U.S. Treasury Secretary Steve Mnuchin says he's still open to buying TikTok's U.S. operations from ByteDance, while Mnuchin believes the app's algorithm could be replicated in the U.S. Well, he spoke to Bloomberg at the Milken Institute Global Conference in Beverly Hills.
Still very interested in buying it, and to the extent they want to sell it or spin it off, we very much want to pursue that. I support that Congress passed the bill and it's now been signed into law. I will say this has had just incredible, overwhelming support with Republicans and Democrats. This may be the only thing that everybody agrees on. The fact that it's on 160 million phones, I do think it's a security issue.
Does the deal still work if the algorithm doesn't come with TikTok?
Well, the Chinese government has been very clear that they won't give an export license on the algorithm, and I understand that. We have sensitive technology that we don't want to transfer to them, and they don't want to transfer this to the U.S. I've actually spoken to a lot of tech companies on working about rebuilding this. I do believe the algorithms could be rebuilt. So my plan, if we were to purchase it, would be to rebuild the technology under U.S. leadership, make sure that it's all disconnected from ByteDance going forward, and that it is very robust and secure.
Well, that's the former U.S. Treasury Secretary Steve Mnuchin speaking to Wall Street Week anchor David Weston. Now, coming up, earnings top estimates at Disney. Shares in the world's biggest entertainment company, though, slump on its outlook. We'll bring you the details next, and this is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Now, Disney shares tumbled the most in 18 months after it reported a disappointing outlook for growth in streaming subscribers in the current quarter. But the chief financial officer, Hugh Johnston, says price hikes are not impacting streaming negatively.
We took prices up a little bit in the beginning of this year and didn't really see much of an impact. So as to what the future brings, we're obviously very judicious with the way that we price. We want to provide access to as many guests as we possibly can. But we do believe that the great experiences we provide, people are willing to pay for.
Well, let's get more from Bloomberg's Charlie Wells. Charlie, good morning. So Disney reported stronger than expected results, or actually strong earnings, but the share price was down. So what's the disconnect?
Yeah, so it wasn't a fairy tale ending to an earnings report that's actually better than expected. So analysts had been expecting earnings per share of $1.12. Disney actually reported $1.21. And I think something really notable in their earnings report, which investors didn't really seem to care about, was the fact that Disney Plus, that all-important streaming platform for them, was profitable for the first time. But it was really these sort of forward-looking metrics that investors seem to be disappointed by. They seem to be disappointed by a potential slowdown in streaming growth overall, as well as sort of travel normalization to some of these theme parks, which are really important for Disney's business.
So, Charlie, the chief executive, Bob Iger, also just fended off, this battle with the activist investor Nelson Peltz. How should Iger be worried about him coming back or someone else coming back?
I mean, he should be concerned in the fact that there was a pretty significant share price drop yesterday, right? 9.5%. That was significant. And one of the points that activists had been making about Disney is that their share price should be performing better. Another issue here was streaming. A lot of these activists, Peltz included, wanted streaming to be doing better. And something striking that Iger said yesterday, he said in a statement that he still sees the overall streaming business reaching profitability, not just for Disney Plus, but for the combined streaming units to be profitable by the fourth quarter. But that puts a lot of pressure on this year ahead.
And very quickly, Reddit, I think the share price is getting more than 10% actually.
So,
market.
Yeah, so they beat expectations on revenue. They have been investing in trying to make the site more user-friendly. They actually brought in more users. It was a growth of 37%. So that's really positive for this business as they try to diversify away from just ad revenue and try to sell, the fact that you can use them to trade large language models. And Wall Street responded positively to that.
Yeah, look at that. Pre-market is actually gaining 14%. There you go. Latest up-to-date seconds. Of course, live pricing. Bloomberg's Charlie Wells there with the two stocks that we're watching. Now, Bloomberg Brief, it's up next, and this is Bloomberg.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big, American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Cranny with Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The Israeli military edges further into Rafah as the U.S. pauses an arms shipment to Israel on concerns about a potential military offensive in the city. TikTok sues the U.S. over a law that would force its Chinese parent company ByteDance to sell the app or face a ban. And Chinese iPhone shipments rise 12% in March after Apple and its retailers slash prices. Manus, go Apple.
Danny, good morning. Yeah, Apple is moving. It's not really impacting the top line of these markets right now. Up 0.5% on Apple because their shipments, their iPhone shipments to China climbed by 12% in March. So keep an eye on Apple as we run through the morning. Look, we've retested the 5,200 level. Earnings are up nearly 9% on the S&P 500. Yields have come lower. Lyft is also moving. They're adding riders at pace. So two of those tech stocks doing quite well. Right now, we're just dipping on the futures back into the red. We're bleeding different directions through the morning. In terms of the bond market, what you can see here is 446. We've dropped by 21 basis points in 5 trading sessions. The 3-year auction went quite well. Today, we're really going to test the 10s. There is $42 billion worth of 10-year government bonds coming to the market. Paul Ryan warned yesterday that neither administrations are potentially facing their debt issues, and you could face some kind of a debt catastrophe. Dollar yen. Now, look, this is the dollar again testing on the upside. We've had more comments from Ueda coming through. The Bank of Japan governor warning that monetary policy response may be needed. I mean, this is flip-flop Ueda, depending on the FX market. So they're testing the resolve of the Bank of Japan. Yen cheapens for the 3rd day. It's as if intervention didn't happen, but it's being challenged. And there's new headlines from Ueda. Danny.
That's right. Ueda is speaking in Tokyo, Manus, saying that it is hard to estimate rate hike impacts in Japan, also saying that the price trend is firmly moving towards 2%. And this is key. He says that we see signs of a virtuous cycle strengthening and that the shift in firms' price and wage setting is becoming clearer. These are lines that sound very different from the Ueda we got from the last BOJ press conference, where he sounded more dovish. This is a Ueda talking about inflation strengthening, talking about the virtuous cycle. It was only a month ago, less than a month ago, where he even said that the yen isn't having a major impact on underlying price trends. And it's sounding different.
And that's why what I'm saying is, you remember Mark Carney and people lambasted him as being, you know, the flip-flop central banker. But here he is, he's talking about, Ueda's talking about high oil prices may weaken the premise for lower cost push pressures. And just on that sort of shift again in dollar yen, testing the dollar up for the third day in a row, if we looked at the retail volume is what's pushing the dollar higher. Individual investors reached 27% of the total transactions on May the 3rd. That is the largest this year.
But again, that's perhaps why we're not seeing more of a reaction for the yen. It is still weaker this morning, but you have to imagine, Manus, that the BOJ is also feeling the government pressure of the issue of a yen, of what it costs to go abroad and what it costs to import anything. Exactly.
More tourists, and probably there's a bit of a pushback maybe on that. But monetary policy response may be needed. We'll talk more about the yen as we go through the morning. Back to stocks, because globally they have staged this comeback so far in May, fueled by the prospects of, you got it, Fed rate cuts. Minneapolis Fed President Neil Kashkari spoke to Bloomberg at the Milken Conference and discussed the 2% inflation target.
The second half of 2023 surprised us at how rapidly inflation fell. That was really good news, and the economy remained strong. We all hoped that was going to continue. The first quarter of this year, it seems like it stalled out. So it's a little too soon to declare that we're definitely stalled out, or maybe it's just taking more time.
Our guest this morning is Max Kedner, Chief Multi-Asset Strategist over at HSBC. So we've hit stall. I think we can all land on that as a consensus. Max, a very good morning to you. But not only did he quote the stall speed, but he also reopened Pandora's box of the possibility if they needed to hike that they would. So he's diametrically opposite to Powell. And he talks about questioning whether we are in restrictive territory. So I think he flew a lot of kites yesterday to perhaps reignite optionality for the Fed. Good morning, Max.
Good morning, Manus. Yeah, and thanks for having me. I don't agree with that. I think we've sort of heard from him what we're used to hear from him. But in terms of the rate hike possibility, I think it is and has become clear last week that the bar for additional rate hikes is extraordinarily high, right? Really, really high. It really does, it does not suffice to have inflation continuing to be stuck. And that is essentially what's been happening since June last year. If we look at headline inflation and we don't bother with, super core or excluding all sorts of things that we don't like and then including them 2 months back after again, if we look at headline inflation, quite frankly, it's been stuck between 3 and 3.5% since June last year. So in reality, I think as much as we got excited and as much as we exaggerated at the beginning of the year in terms of our dovish expectations, I think the market is now exaggerating on the hawkish side and is sort of treating this as if the world has changed upside down and is entirely different now, even though nothing really has changed on the inflation side.
Max, are you saying that people cherry pick inflation data to fit their own narrative? I have never heard such an accusation. Max, okay, so if we've gone too far in the hawkish narrative, does that mean that the come down we've seen in the front end and really in duration too, that it's not yet over, that we need to price back in some of what we took out to start the year?
Yeah, I think, duration overall has become a lot more attractive, particularly in the US, and particularly if you think from a portfolio, from a multi-asset and asset allocation angle, you're clearly seeing that, now from a hedging perspective, treasuries and duration has become much, much more attractive because, let's face it, at the beginning of the year, for example, short-term inflation expectations were already below target. They're now almost 100 basis points higher. We have seen in April this spike in interest rate volatility. So that is behind us as well. When we looked at longer-dated nominal forwards, at the beginning of the year, they were at or below 3% already. So extremely low, right? We had these 7 or even more rate cuts in the price at the beginning of the year for the ECB and the Fed. All of those things, whether it's the nominal forwards, whether it's interest rate volatility, whether it's short-term inflation expectations, all of those things have really changed. So the starting point for owning duration now has become much, much more favorable compared to 4.5 months ago.
So the question then is, we're going through various recalibrations to choose a phrase from the Fed and to choose one from you. We've gone from 7 to virtually 0 back to 2. Do you think that is the right recalibration? Is that the 1990s? Is that 2019 as you reflect? Is your view those are the kind of rate cuts that we're going to get, and that underpins pro-risk cross-asset?
Yeah, I think that is the case. I think you're really right on that one, because I think by the end of next year, it's much more likely that we're going to get maybe 3-4 rate cuts. So we've got 100 basis points of total rate cuts by the end of 2025 from the Fed. And that, that's not a genuine start of a real rate cutting cycle. It's not one where we should be bothering so much about the starting point. I don't think it really matters whether you own high yield or equities or emerging market debt or any kind of risk assets there, really. I don't think it really matters whether, the Fed is going to go in June or whether they go in September or December, as long as the H word, as long as the hike word is not coming back into play, as long as it is, okay, the next one is going to be a cut. We just don't have the confidence quite yet. But don't worry, in a couple of months it will come down and we'll start cutting. The much more important point is that it's going to be more like a recalibration, like you said, and that, I think we are going to be bouncing around between those extremes in the next couple of months. We'll be pricing in maybe 4 or 5 rate cuts at some point again, because it looks more like Goldilocks, and then we look a bit more like stagflation again. So you've got to trade those ranges, I think, in rates. But for equities, for high yield, for emerging market debt, for those risk assets, it's really pretty positive, because it's a reflection of better nominal growth.
And Max, this is when, last time you joined us, and in your notes, a certain fairy tale character tends to come up quite frequently on that. Of course, she's Goldilocks, and the growth is there. You can see it in the earnings. But Max, what do you make of the smaller pieces of anecdotal evidence, whether it be your Starbuckses, your McDonald's, or even some of the consumer sentiment survey? Does that not concern you that maybe all isn't okay with growth?
It doesn't concern me. If I'm going to the Bloomberg studio, for example, I get coffee for free, so it helps my personal CPI basket. That's good, right? But I guess, if we're talking on the anecdotal evidence, yeah, there is some certain pockets certainly that look a bit wobbly. There is certainly, things like credit card delinquencies picking up, perhaps private household bankruptcies picking up. Those sorts of things, those pockets clearly are, looking a bit wobbly. But we also need to bear in mind 2 things. Number one, whoever's been ever charged with putting together, a list of macro variables, call it 20, 25 variables to gauge where we are in the cycle, you will always find that there's going to be some variables that will look out of whack with the others. There's never really going to be a cycle where everything gives you the green light. That's point one. Point two is, in fact, when we look at these weaker points, what we are seeing is that most of them are still very far away from the pain points where we've been before the financial crisis. So we're not even reaching average levels in terms of, for example, credit card delinquencies, where we were on average before the financial crisis. We're still miles away from that. And that, gives us still a bit of a buffer until things really start to be a bit more dramatic, I think.
Okay, Max. Thanks so much. Thanks for bringing your own personal CPI basket with you, Max Kettner of HSBC.
I feel sorry for him now. I think we should pay for his cab.
I think we do, no?
We probably do. I didn't want to say that too.
Max, thanks so much. Have a good rest of your day. Okay, let's get to some of the other top stories trending on the terminal this morning. Riksbank has cut its benchmark rate for the first time since 2016. The Swedish central bank lowered its rate by a quarter point to 3.75%, and the move makes it the second among advanced world peers after the Swiss National Bank eased post-pandemic.
JP Morgan is limiting its dealings with Seganti Capital, the Asian hedge fund giant charged with insider trading by authorities in Hong Kong. According to Bloomberg sources, JP Morgan won't engage with Seganti on new block trades and IPOs. That's on a global basis. It's long been a prized client of Wall Street banks that need to unload chunks of shares in block trades and stock offerings. Seganti says it intends to defend itself against the charges.
Donald Trump's criminal trial for allegedly mishandling classified documents has been postponed indefinitely. It's a significant victory for the presumptive Republican presidential nominee, who is facing 4 criminal cases and is seeking to avoid multiple trials before the November election.
Coming up, TikTok sues the U.S. government. The details on the legal fight. That's next.
But first, we need to discuss the U.S. pauses a weapons shipment to Israel over concerns of an invasion of Rafah. All to come on Bloomberg.
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg Brief. Danny Berger and Manish Krani in New York. So the U.S. has paused a shipment of weapons to Israel over concerns about Israel nearing a decision to launch a wide-ranging military offensive in Rafah, which the Biden administration is opposing. Let's bring in Bloomberg's Roz Matheson. So, Roz, these specific weapons, they are larger bombs, the idea being if they are going to be on the ground in Rafah, it would be catastrophic to use these type of weapons. So by not giving them to Israel, does it really impact things on the ground? Is this something they actually would have used?
Well, it's unclear how much it would have impacted, but it's really symbolic more than anything else. It's about the US sending a direct message to Israel again about their concern about the impact potentially of a large-scale operation inside Rafah, particularly with so many civilians in the area, and just the optics, the US not wanting heavy bombs that the US has provided being used in that area when we have so many civilians. So it is a symbolic message from the US. Would it impact the trajectory or the nature of a large-scale Israeli operation in Rafah? That's unlikely, although it may have assisted them somewhat. But more broadly, the US is not stopping the support of Israel militarily. They're not stopping the supply of military aid to Israel as a whole, and certainly nothing that they say would help Israel defend itself, especially, things like the Iron Dome missile shield and so on. And so that big military package we saw recently passed in Congress, that's not stopping. It's just halting the specific thing, which are these heavy 2,000-pound bombs, several thousand of them that the US was going to supply. But certainly the US could not afford the optics of having those weapons being used in Rafah.
So it's a moment of symbolism that the White House has chosen to display. I mean, the White House has repeatedly expressed opposition to the Rafah incursion. John Kirby on Tuesday described the existing operation as limited. Is it limited? How would you describe the offensive right now in Rafah?
Well, it's certainly picking up a bit. I mean, we've seen yesterday, of course, that they occupied the Rafah border crossing. That's the first time they've been in there since the war broke out. There have been airstrikes that have been going on. We know that there are fighting going on today in the east of Rafah between groups on the ground and Israeli troops. So certainly the fighting is still going on. More Israeli troops are going in there, but it's a bit of a slow walk. It's one of those things where we may not see that one moment which we say there's now a big offensive going on inside Rafah. It could be a bit by bit, things pick up, and over time it evolves into what we would class as a full-scale operation. But it does seem that, you know, each day Israel is stepping it up a notch, and that's as time is running out, obviously, to get that ceasefire more broadly. Those talks are still in trouble.
Roz, thank you very much. That is Bloomberg's Roz Matheson. Now, back here in the U.S., of course, the unrest on college campuses continue. As recently as this week, Harvard threatened protesters leave the encampment or face suspension. The university's professor of economics said that college campus protests against Israel are partially fueled by economic disparity. Raj Chetty spoke to Bloomberg at the Milken Conference about the challenges in the education system at this time.
Finances are part of it. I think part of it is somehow making teaching more of a prestigious profession where people feel like this is something that I really aspire to do. But I also think part of it is just about flexibility in the way we pay people. So in most public schools in America, there's a lot of rigidity where your pay is basically set as a function of how many years you've taught. If you've got a star teacher who's really inspiring your students, there's no way to reward that teacher and say, you know, we're going to pay you extra, give you that bonus, really work hard to try to keep you. In most of the jobs we're all in outside education, if you've got a star employee, you're going to try to keep that employee. And I think giving schools that latitude can make a difference.
Raj, I do want to go back to colleges and universities and the process for prospective students to get into those universities. There's been a lot of back and forth over admission requirements, whether you use standardized tests, whether you don't. I know Harvard has gone back and forth on this here. What is the best barometer to measure whether a student is acceptable enough to be part of your university?
So our team has been studying these issues recently. Last year put out a paper trying to understand who gets into highly selective colleges. Does it matter how you should evaluate students? Part of what came out of that paper is very clear evidence that standardized tests are actually some of the best predictors we have of how well kids do in college and after college. They're not perfect, and we worry that, you know, you can prepare for tests and you can take the test multiple times, and there may be certain biases inherent in those tests. But the issue is that the other things that you might use if you don't have standardized tests are even more prone to those biases. So if you put weight on things like high school grades or extracurriculars or your rec letters, kids with more resources have more of an opportunity to credential themselves on those fronts. And the data show that that is actually a bigger set of biases. Those outcomes become less predictive of how well kids will do than standardized tests. And so in light of that evidence, actually directly as a result of that research, we've spoken with folks at a number of colleges, and they have started to bring back standardized testing.
One last question. I'm not going to get into politics, but the protests that we have seen on campuses across the United States, including Harvard, I am curious, how do we get academia, higher education to be a safe place once again for discussions with variety of thought?
Yeah, you know, I think the challenge here is to realize we're all in it together and to kind of create a framework in which we can share ideas without necessarily disrupting other people's learning and to respect everyone's views. I think some of those protests are emerging from fundamental tensions about what people think about opportunities. Do we really have a fair society where everyone has a fair shot?
Raj Chetty in conversation with the Bloomberg team at the Milken Conference from Harvard University. More on the main stories this morning on Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology. This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Breaking news now coming through from the Bank of Japan. Danny, this is Mr. Ueda. Abrupt, one-sided, weak yen is negative for the economy. Again, this is an evolution of the jawboning by the Bank of Japan. A little bit earlier today, the governor made it clear, and this is, I think, what was ignored by the market and shocked you and I. Bank of Japan governor warns monetary policy response may be needed depending on the FX, and this is diametrically opposed to where we were just 10 days ago.
Yeah, so in the BOJ press conference, he had said that they don't target any sort of foreign exchange rate, and he was asked directly about the yen, and he said it's not having an impact on inflation, therefore they're not taking action. Manus, this brings into the fore the concerns about the trustworthiness of Ueda. You could imagine perhaps there's some pressure from the government in order to act because of issues like import prices and what it costs to go abroad for the Japanese public. So here you have a Ueda that's taking a shift in tone, which, by the way, isn't impacting the exchange rate itself. But perhaps is impacting his trustworthiness.
Well, it's about whether you believe in a central banker. It's about whether you believe and they're going to put their money where their mouth is. Look, there's a couple of other stories which I think we just need to sort of get through that are on the front pages. This is what we usually do at this stage. We'll come back to Ueda in just a moment. We've got the FDIC. They've got their own internal report, Danny. They're talking about the outcome of that. We'll bring you a little bit more on that.
They had a probe about misogyny in the workplace, and essentially the outcome was, yes, we found it.
And FTX, now this is a blinder, isn't it? I mean, if you're a creditor there, you're going to get paid out and paid out plenty because there's more money as a result of all the cryptocurrencies rallying.
Yes, the irony is they're worth more than $16 billion, about what they were worth in 2020. So there you go.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of ON's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined ON as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but ON's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
From our global headquarters in New York, I'm Danny Berger alongside Manish Krani. Let's set your agenda.
The Israeli military edges further into Rafah as the U.S. pauses an arms shipment to Israel on concerns about a potential military offensive in the city. TikTok sues the U.S. over a law that would force its Chinese parent company, ByteDance, to sell the app or face a ban. And Chinese iPhone shipments rise 12% in March for Apple, and its retailers slashed prices. Danny, good morning.
Good morning, Manish. Sadly, Apple isn't coming to save the day for this equity market. We're taking a breather after 5 straight days of gains for the S&P. Tech underperformed yesterday, a little bit lackluster. On the futures market, yes, we're above 5,200. We hit that on the cash market yesterday, pulled back from it. Also, a 5-day streak of lower yields for your U.S. 10-year yield. 447 is where we stand this morning. We're up by 2 basis points. We have fallen 24 basis points since the peak in the FOMC. Max Kettner is saying the hawkishness has gone a little bit too far, but if we're cutting, it doesn't really matter when we start. As long as it's 3 to 4 cuts, that's not a normal easing cycle, and therefore it should not impact risk assets. Now, when it comes to the yen, Manis, this is quite unfortunate. Yen weaker versus the dollar by nearly 0.5%. If anything, it's gone a little bit weaker this morning after we heard these headlines from UEDA saying that abrupt, one-sided, weak yen is negative for the economy, and saying that Japan's price trend is moving towards 2%. That's the kind of language that says, perhaps we're going to hike. Hey, market, you shouldn't be selling yen, but this is what we're getting.
Yeah, but you know who is selling yen? It's retail investors. They are piling in. They're shorting yen like billions. So this is definitely testing the mettle of intervention. We saw $60-odd billion last week, very compressed period of time. We've reflected on this. Retail sellers, let me just give you the stat. The volume of dollar buying, yen selling by individual investors reached over 27% of total transactions on May the 3rd. That is the largest this year. So this is not just institutional long dollar short yen retesting. This is now a zeitgeist. This is now hopped on the train. Everybody's on it. The retail sellers are in there as well.
But this is the thing, the confidence of someone to look at what UEDA says and, okay, I'm going to trade on that. It is thin because, one, what he said at the last BOJ presser was different. He said that they don't target FX levels and it's not having an impact. And secondly, we know that the BOJ likes to surprise the market. So perhaps it's a market that says, we're not going to believe you until we see that decision, until we see price hikes.
Yeah, but he did say this morning as well, monetary policy may be needed depending on the FX move. And that's the first hint that perhaps we're moving from that dovish stance that he had just 10 days ago at the meeting to something a little bit more punchy. So, you know, it's not reflected in dollar yen this morning. That's for a fact.
I know, for all the jawboning, not much to show of it. There. Okay, Manis, let's switch to equities that have seen, again, a 5-day winning streak. Our next guest writes that equity markets, though, will remain challenged with continued influence of still high rates, stubborn pockets of inflation and mixed economic data. Overall earnings growth is improving, but individual sectors are vulnerable. Joining us now is the woman behind that. It is Lori Heinel, Global CIO at State Street Global Advisors. Lori, great to see you this morning. Okay, so tell me, what's still vulnerable at this point?
Well, first of all, we do believe that the economy continues to slow, and we do believe that inflation continues to come down. And so basically, any place where the markets have relied on consumers to propel them higher, we think that those are going to be pockets of vulnerability. So think about consumer discretionary as one example.
Laurie, good morning to you. Consumer discretionary. Yeah, I mean, we're just having that conversation with Max Kettner. Now, he's a lot more bullish on this market. He would say that the weakness in the consumer, in other words, the delinquencies on the credit cards, the slowdown, is nowhere near as bad as it was pre-GFC. Your assessment of where we are, those pandemic savings are rolling down, they're into negative territory. Are we going to have just a bumpier, to use the Fed's language, a bumpier back 6 months for the consumer?
Absolutely. And again, this is not a GFC kind of moment. So we're not seeing collapse in credit. We're not seeing collapse in consumer. We're not seeing collapse in property prices. So there are lots of things to like about where we are at this point in time. But the underlying narrative continues to be quite fragile. So you do have a consumer that's more exhausted. We're seeing that in savings rates. We're seeing that in the lack of high wage growth, things of that nature. But you also have an environment where there still is a lot of flush in the system. We still have government spending, for example, on things like the CHIPS Act and the IRA. And so this will be supportive. So there are pockets of goodness, but there are also pockets of vulnerability. And that's what we think should actually be driving the Fed as they look at their next meetings.
Lori, then why among those pockets are we seeing an earnings growth that's looking something over 5.5%? Why is that so strong then?
Well, again, it's one of those dimensions of it. Some of it's the year-over-year comparable. So you do have companies that are able to absorb the inflation that we had in the past and continue to actually raise prices. And so that's actually propelling them higher. But you also have, companies have been quite lean. They've been very careful about how they've spent their dollars. They haven't invested in capital necessarily. They've returned money to shareholders. So there are some underlying dynamics there that they continue to maneuver around, but that also only has certain limits.
Does this build the narrative even more for bonds? If you look at the bond market, it has recalibrated. It's a lovely word, and I think it does encapsulate 22, 23 basis points of drawdown in yield, in 10s, and likewise, 2s are below 5%. So we've had this sort of moment of recalibration. Do you think that that extends, and is that why you want to be longer of treasuries relative to credit?
Well, as you probably remember, we were calling for bonds to do extremely well in 2024, and so far that's proven challenging. Yes, you've gotten a little bit of carry, but price action has not been in our favor. We actually think at these levels, bonds are quite compelling. Now, how quickly you dive into bonds, especially with the Fed being a little bit more measured in its rate hikes, we're still holding fairly high levels of cash relative to what we would normally see in the portfolios, but we do think that the entry point on bonds is very attractive right now.
Lori, this is the thing. I mean, you're not alone in saying that this would be the year of the bond bull market. So many people have said that to us. So when it comes to things like, okay, yes, bonds are finally going to perform, equities are going to be a little bit weaker, those calls have been extremely challenged given, to use Manas's phrase, quoting the Fed, the bumpiness of this economy. I mean, it's been impossible to time, right? So you have these ideas, but how much conviction can you actually hold them in what's in your portfolio?
Well, a lot of it depends on your time horizon, right? If your time horizon is next month or next week, we still think the momentum trade favors equities. And we were also, as I mentioned, are holding fairly high levels of cash because we want to be more opportunistic when we get those corrections in equities or when we start to see the Fed be signaling perhaps a bit faster path. So one thing is hold a bit more cash, disperse your bets a little bit, look for those diversifiers. We have had a tactical position in gold in the portfolio for most of the year, and that has served us very, very well. But also think quality, because one of the things that you want to try to avoid are those deep drawdowns. So even in things like high yield and equities, look for quality where there is durability of earnings and pricing power.
You sound like a very reluctant holder of that cash, which sort of gives me a little bit of faith in that it's probably not the wrong thing to do. Now, you said if there's a drawdown in equities, if there's a bit of a rumble in equities, you'd be tempted to go back in. Is that going to be the trigger point for you, Laurie? Is it going to be deployed to equities over credit, over bonds, when that moment comes? Or how do you look at the landscape for reallocation?
Well, there are really two major things. Certainly, if we get a pullback in equities against a sort of stable backdrop in the economy, that would give us some confidence that valuations are attractive and it's time to actually increase our allocation there. But the other really important thing is, what's the economic trajectory? Again, our view is that the economy is going to slow. We have recession odds in 2025 at about 30%. So that's still kind of heightened. So if you do see this fragility or the vulnerability that I talked about earlier broadening, and we start to have an environment where high hawkish rates really drive the economy into a bad place, then that's a different ballgame. We're not there, but that's really what ultimately drives the market, is the fundamentals.
All right, Laurie, really appreciate your time this morning. Laurie Heinel of State Street Global Advisors. Okay, coming up on the show, TikTok's owner puts up a legal fight with the U.S., while the former Treasury Secretary, Steve Mnuchin, says he's still interested in buying the app's U.S. operation. We're going to have more of that next on Bloomberg Brief.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big. With $1 trillion of assets almost, we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Very interested in buying it, and to the extent they want to sell it or spin it off, we very much want to pursue that. I support that Congress passed the bill and it's now been signed into law. I will say this has had just incredible, overwhelming support with Republicans and Democrats. This may be the only thing that everybody agrees on. The fact that it's on 160 million phones, I do think it's a security issue.
The former Treasury Secretary, Steve Mnuchin there, still looking for a piece of TikTok while its Chinese owner ByteDance sets the stage for what could be a long legal fight against the United States. Let's bring in Tom McKenzie for a little bit more. So TikTok is going nuclear. They're going to sue the president. They're really pushing back. They are not rolling over at the moment on ByteDance and TikTok, are they?
They are not, and this legal action suggests that they're not looking for a partner with which to divest as well, because those were the two options after, of course, that ban or that piece of legislation was signed into law back, of course, in early April. The choices were you either divest or you get banned by January the 19th. They're pursuing this legal action. They say there is a freedom of speech, a First Amendment rights issue at play here. Of course, the US government says this is a national security risk. Interestingly, on the time frame, Bloomberg Intelligence, the team there, expect that this actually could be expedited by the courts. You could see a ruling by the end of this year, and then it goes to the Supreme Court. That is the expectation from Bloomberg Intelligence, and possibly then by the second half, potentially second quarter, I should say, of 2025, you could get that final decision. And Bloomberg Intelligence puts their chances, ByteDance chances, at about 30% of winning that case.
Awful timing for Manus Cranny, who literally just became
devastated.
a TikTok star. In a sign of the times, he's already starting to move everything over to Reels. So he knows he's hedging his bets.
She's my manager, actually, Tom. You should get her on board. She charges a very small commission, does a great job.
She's good. She's good.
Yeah, I've already convinced Manus to take out his millennial pauses, so we've come out a long way. Tom, elsewhere in the tech and specifically the tech China world, I mean, keeping your head appraised of the Apple data is difficult in China, but the official data we've gotten this morning is that March iPhone shipments rose 12% after they had a lot of discounts. Are we in the all clear yet for Apple in China?
Yeah, look, you're absolutely right. We've been whipsawed by the data in terms of the sales numbers out of China for Apple, which, of course, about 20% of its sales in terms of the iPhone come from that key market. And we saw at the beginning part of this year, of course, and this is what you're referencing, double-digit drops in terms of sales of that crucial iPhone into that Chinese market. Now the most recent data coming through from the official Chinese data suggesting that in March they saw a 12% increase. That coming through after a lot of cutting of the costs, I should say. Rare. I'm getting there. I've been distracted by Manus on TikTok. But the price cuts have come through for Apple, and that seems to be supportive. They're seeing a pickup in sales. Don't forget as well, the consumer generally in China is turning a little bit more positive. You've seen that in some of the holiday season data as well. Not back to pre-pandemic levels, but the consumer is starting to sense and starting to become a little bit positive. So you get that in combination with the cost cutting that came through around the iPhones, and maybe this is turning the corner. Interestingly, Tim Cook on the call around the earnings said that they have seen growth, that they are seeing growth in the current quarter out of China, though he wouldn't give more specifics.
Let's just wrap it up on the US's most recent move. Now, this is on Intel and Qualcomm. I just want to get a sense. They've revoked some of the licenses on selling chips to Huawei, but is it more political theater rather than a significant blow?
I mean, certainly the Biden administration is under pressure to take a harder line, even though it has taken the Trump tariffs and restrictions and ramped those up. It does come under pressure, and it has been from Democrats and Republicans. So this may be part of that play. Maybe it's political. I think there's also a real concern that Huawei, which has become now at the vanguard of China's efforts around AI, can start to produce very sophisticated chips and components, and that the input from the US, from the Netherlands and Japan is going to be consequential to that. So they had licenses, Qualcomm and Intel, to sell some of these components to Huawei. Those licenses have now been removed, so that restriction has been tightened. But this is already a very heavily sanctioned company, Huawei. It is not amongst the top 10 customers for either Qualcomm or Intel. So on one level, this is a small deal in terms of those two companies, but the broader picture, it just shows that effort on the national security front in the US to tighten these restrictions, particularly aimed at what is becoming a champion for China around AI and Huawei.
Tom, appreciate it. Bloomberg's Tom McKenzie there. All right, from TikTok to Reddit, I want to get a quick check on the share price pre-market because it's extending gains, 14% this morning after posting their earnings, the first since their IPO. Let's go over to Charlie Wells on this. So, Charlie, we had this monster IPO from Reddit. I guess they're living up to those expectations.
They're living up to those expectations and surpassing them. I mean, Reddit needed this. This was their first earnings report since that very high-profile IPO. And what we saw was a beat on revenue. It was up 50% from the year before. That came off of improvements in their ad platform. So 98% of revenue from Reddit has historically come from advertising. So that was incredibly positive. But looking to the future, and I think that's what we're really seeing in this share price action, is that AI magic dust that really gave the IPO quite a sparkle, I would say, earlier this year. And what we're seeing here is the numbers supporting daily active user growth. So that in the quarter was up 37%. There are more communities on Reddit. There are more people joining. And that makes that proposition of data licensing, of licensing to the likes of Meta, of Google, to OpenAI, a lot more attractive because there's more data, there's more content to train these large language models. And that has been the pitch for Reddit as they try to diversify between being that ad business and being more of an AI or at least AI adjacent business.
Charlie, thank you very much. It certainly was a blistering moment out of the gates there yesterday for Reddit, and that continues this morning. Danny, if you look at what the CEO is talking about, I think the next biggest business model for us is what we call the user economy. So it is about adapting that AI model over the data and enhancing that. So let's just keep an eye on that. It's certainly bid up this morning. We've got other earnings news as well. We've got Rivian falling short of Wall Street's earnings expectations to start the year. The automaker working to revamp its manufacturing operations to boost the output of electric vehicles. Bloomberg's Craig Trudell joins us now. So what are we seeing? I mean, the stock had a sell-off on the back of the report. What is the outlook for Rivian? I mean, it's been a challenging time all the way around, and this is about trust in deliveries, really, isn't it?
Yeah, I think that's right. This has very much been a show-me stock where, you know, on paper, as it was going public, it was, you know, ticking all the right boxes. At that time, you know, if you were EV, you were very hot. You know, Tesla was still very much, you know, a meme stock and the talk of the auto industry. I suppose that last part is still the case, that we still talk about that company quite a bit. But I think we've seen this EV slowdown that, you know, it's gone from a situation where, you know, being a pure play battery electric vehicle maker has gone from being a strength to a liability. And I think Rivian has really struggled to execute, has struggled to hit its numbers, and is in a bit of a holding pattern right now of trying to, you know, improve the utilization of the factory capacity it does have before it, you know, makes big investments in new facilities. And so we're going to see, you know, this current quarter, you know, a pause in production, and that's going to, you know, be something that they are really going to have to sort of prove to the market that pause was worthwhile and potentially break even toward the end of this year.
It's all about proving that your original business model can work, something that Tesla is learning. And when in the Lyft earnings yesterday, Craig, which by the way were pretty good, more users doing bookings, but the company on the call was asked about Tesla trying to launch a robo-taxi service. And the CEO was extremely skeptical. I'm sure that's not something Musk is going to be happy about.
Yeah, it will be interesting to see if we get, you know, some ex posts. I mean, some days he's you know, weighing in on what J.K. Rowling is doing on his platform. So maybe we'll see. But I think it is interesting that, you know, this as a concept has been something that, you know, back in like 2016, 2017 timeframe, you know, Uber and Lyft were talking about an awful lot. We're investing in. Lyft had a partnership with General Motors. I think the whole industry has kind of come to this realization of just how difficult and costly it's going to be to commercialize this concept. And Musk has very much sort of gone the other way of, whereas everybody else has gotten, you know, religion as to just how much of a stretch this is going to be. He is very much doubling down on it. And so to hear Lyft's CEO sort of push back on this idea that this isn't going to be, you know, simple, this isn't going to be cheap, really speaks to this idea that, you know, people who know this business of running a shared fleet or running a service upon which a shared fleet of cars runs has an idea of just how much execution risk there is for Musk ahead.
Craig, thank you very much. That's Craig Trudell there on the latest tech stories. Coming up, we're going to set your agenda for the trading day right the way through on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's your Bloomberg Brief. Danny Berger and Manish Granny in New York. Okay, let's get you set up for your trading day. Archegos Capital, remember them? Their Bill Huang is going to go on trial in federal court in New York on fraud and racketeering conspiracy charges. We're also going to hear from Fed officials throughout the day. We're going to hear from Jefferson, Collins, and Cook after the bell. We got more earnings from Uber, ARM, and Robinhood. Manish, how are your stocks?
I'm going to kick off with Reddit. We just spent a bit of time there. They had their IPO. Stock is up 13.66%. So doing quite nicely. It's all about how you monetize the platform. Lyft, we also spent a bit of time on that, up 5 1/8%. They've raised their bookings for the outlook, so they're certainly adding users there. And then you've got their rival Uber reporting today, and is expected to show continued double-digit growth in their gross bookings. I can tell you from personal experience, prices are definitely up on Uber. Yeah? Not gouging.
What do you mean? You're a man of the people. You take the subway. What do you mean Uber?
I just want to make sure we've got good market data on every form of transport available in the United States of America. I've been on planes, I've been on trains, I've been in Uber, and I've been in Lyft.
Love it. Manish Cranny doing channel check. Sell-side analyst, beware. Hey, Manish, a quick check on the 10-year, because we saw 5 days of yields lower. That has started to reverse. Yields pushing ever so slightly higher today, but still, the fact stands, we have rallied 45 basis points lower since the peak on FOMC day.
And in the past 5 days, we have recalibrated, to use that favorite word, by 21 basis points. Today, it's 10-year government bonds. $58 billion of threes went well yesterday. Today, it's $42 billion of tens. Paul Ryan warns of a debt crisis in the next administration. Small issue.
Yeah, but the market's not trading on that. Max Kettner says duration, it's attractive, buy it despite the bounciness. Okay, that's it for us. Surveillance up ahead.
the linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up the, we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Everything's pointing green for the Fed to start cutting rates here.
This year maybe has 1 or 2 rate cuts in it.
When you're the Federal Reserve, once you start cutting rates, can you stop? And the market's even not convinced.
It doesn't really matter because even if they cut, they're only cutting a little bit.
Our expectation is that rates stay where they are, potentially a cut at the end of the year, and that's supportive for markets.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. 4-day winning streak on the S&P 500 coming into Wednesday. Bond yields dropping for 5 consecutive days. This line from Bank of America and Savita Subramaniam. No news is good news, and there's hardly been any news. Today, once again, light on data, light on earnings, heavy on Fed speak. Here's today's lineup. Let's go through the names together. Vice Chair Jefferson, Governor Kirk, Boston Fed President Collins. Tons more Fed speak this week.
I love it. This is just giving you a sense of where we are in the cycle of data and lack thereof. That we're focusing on Fed speak as the leading issue because that is the only thing. And in a vacuum, Neil Kashkari was so loud yesterday when he said that basically his base case is staying on hold for a much longer time. He raised the possibility of a potential rate hike, but he talked about euphoria of markets. And I thought this was fascinating about how there's this sort of euphoric embrace of every disinflationary print that we get. And he thinks that that's a little bit premature.
Are we calling it euphoric? Would you say that's what it is?
It's a bias to see things in the most disinflationary Goldilocks way possible. You can interpret that however you'd like.
Disinflation, the theme at the moment over the last week. Decent earnings, pushing back rate cut calls, then bringing them back in a little bit. September feels like the new June. This from Morgan Stanley and Ellen Zentner. Anne-Marie, we remain bullish on our call for 325 basis point rate cuts this year, but we're pushing out the start to September. They're not alone.
And you have other people even actually pushing out, other analysts saying we might not see one till December. And this goes to what Neil Kashkari said yesterday, quote, the most likely scenario is we sit here for an extended period of time. The question is, what is that expended period of time, and what kind of data does he want to see, and how much of that data before they begin cutting rates?
That's the Fed speak. Let's deal with the central bank action elsewhere. So the world's oldest central bank, the Riksbank in Sweden, the first rate cut in about 8 years. They make a move. Ueda over in Japan, he's starting to make a different kind of move. He's starting to talk up a policy shift. This is what he had to say earlier on this morning. Abrupt, one-sided, weak yen is negative for the economy. And Lisa, just raising the idea that maybe they can respond with monetary policy.
My favorite thing is to take a look at what the yen is doing to this, which is nothing. Basically, it's losing value. It's weakening, which means that the credibility that verbal intervention has over in Japan is nada, or almost that. And so that, to me, is really the takeaway here. Yeah, raising the prospect, but, oh yeah, not seeing it in market action.
But they've already tried verbal intervention. It didn't work. So they actually had to intervene. And it did work. but it's not holding on. I still maintain what Alvin Tran at RBC says. Basically, 160 is the new line in the sand.
So 160 last week, back down to about 155.40. Plenty of developments in the Middle East we need to stay on top of as well. According to a senior U.S. administration official, the United States has paused the shipment of bombs to Israel. Clear concern here about a potential military offensive in Rafah, and unclear whether those bombs will ultimately be delivered.
That's right. This is a pause, but not an ultimate suspension just yet. The U.S. administration has not made a final decision, but it comes at a time when they are clearly trying to get Israel on board for a ceasefire negotiation. Reuters reporting that Bill Burns, who's been the key negotiator to the United States, will be traveling later today from Cairo to Israel to speak to Benjamin Netanyahu. Potentially that is coming down the pipeline, and at the same time the U.S. is saying, well, we're going to hold off on these shipments for now.
And you have to wonder how much this is just directly driven by the politics of the moment. This is eviscerating the ratings for President Biden when it comes to the younger cohort, and there's a question of how does he get out from under this? Is it enough just to get some sort of ceasefire? Can he try to expedite that? We know that they're going to be having additional talks, as Anne-Marie was saying. To me, that's what I'm watching, how much that's shaping his rhetoric, because at the Holocaust Remembrance speech yesterday, he was very much supportive and talking about the importance of supporting Israel.
It's difficult to hide from the brutal reality on the ground in Gaza as well. In a place like Rafah, we're talking about a dense urban area with more than 1 million Palestinians. This is playing out in real time, and we can see how this is playing out, and it is utterly devastating to watch. And it's clear the president is in a much more delicate position now than he was maybe back in early October.
If those bombs are used to kill thousands and thousands of innocent civilians, that will be devastating, both on a humanitarian level and also just in terms of what that means, what the implication is for the United States.
Terry Haynes of Pangaea joining us a little bit later on those issues. For the broader market, welcome to the programme to you all. Equity futures on the S&P 500, just about unchanged here. In the bond market, yields a little bit higher by 2 basis points. On a 10-year, 447.95. The euro not doing much, 107.51. We'll talk a lot more about what's happening in the commodity market, with crude just a little bit lower in the 70s. Coming up this hour, Marvin Lowe of State Street pushing back on the Fed's outlook for rates. Terry Haynes of Pangaea Policy as the US pauses a weapons shipment to Israel. And Angelo Zeno of CFRA as Apple gets a boost in China. We begin with our top story. Fed President Neil Kashkari warning rates may stay higher for an extended period of time. Marvin Lowe of State Street saying this: variables can easily justify a neutral rate closer to or above 4% rather than the Fed's long-term 2.5% target. In that instance, the 10-year will remain closer to 5.5%. Marvin's with us around the table. Marvin, good morning to you. Good morning. Is that a base case call on a 10-year north of 5%?
Yeah, I mean, I think that once we get through the start of the cutting cycle, I'm so focused on it, September, the new June, December, really, where does it settle? How deep or shallow is this cutting cycle going to be? I think we're getting to the stage where we need to think about that. Can a 2% inflation target actually work in this new environment?
I think last time we spoke, you said don't fade the market strength. Given what you've just told us, where does that stand now?
Yeah, I mean, certainly the tailwind created by rate cuts coming is powerful. I wouldn't argue with that, and really you could still get duration that can outperform once we get there. But really, we're thinking a little bit more in the intermediate term. Kind of trading this tick by tick type of environment is great for the screens, but in terms of setting up your asset allocation, I think we do need to think about what the world might look like in 2025 and beyond.
Which raises this question of how you still are positive on stocks if you see a benchmark 10-year yield of 5.5%.
Yeah, I mean, number one, it is a relative game that we exist in, right? So certainly growth in stocks and equities have outperformed. And you want to own that growth in my mind. So there's always going to be opportunities. U.S. exceptionalism, it's making its way through the U.S. stock market. And I think that can be somewhat sustainable. If we wind up talking about an environment where inflation is higher, that also means that there's nominal pricing power that exists for some of these companies. And, it does come down to the blocking and tackling, whether we're looking at individual credits or individual equity names that we want to own in our portfolio.
In the bastion of worries right now, we have the federal deficit for some people. We have Steve Eisman saying, the deficit. And those people who say that are wrong, and they have been wrong for the past 40 years. They're premature, which is wrong in our business. You had Paul Ryan, the former House Speaker, yesterday saying, the deficit, basically, yesterday. He basically went on Bloomberg Television, was talking about how failed bond auctions are a very real risk, and he is watching bond auctions. Do you think that that's something that's on your radar as a market risk?
Yeah, it absolutely is. It's probably one of the biggest concerns I have when I get to this 5.5% number. The amount of deficits that we're running is unprecedented, especially during boom times. The fact that we're talking about unemployment numbers that are 4%, around 4%, and still running deficits is unprecedented. And just the amount of debt that we have, and again, I don't want to sound alarmist. I've heard about deficit concerns and failed auctions in the many decades that I've sat in the seat, and you're right, they haven't come to fruition, but we have so much debt out there now, and we are seeing that the central banks of the world are buying less, the official reserve managers are buying less. That means that more price-sensitive folks, the real money as we call them, need to buy more, and they're not as flexible, or they're much more flexible whether or not they want to go into that market.
Does that 5.5% baseline call for the 10-year for you take that into consideration? How much is the deficit part of the extra premium that people are going to charge?
Yeah, it certainly is part of it. It's a mosaic. Term premiums are one of the things that we kind of look at from the geeky bond world. How much compensation do you need to own treasuries outside of just the inflation number that you expect in there? Greater inflation volatility, potential supply and demand issues as a result of the amount of debt is all part of that discussion.
Lisa mentioned Paul Ryan. What he was talking about was that the next president could basically have a debt crisis on his hands. You are looking at positioning going into the election and risk assets. How are you preparing?
Yeah, I mean, certainly we recently put out a report, which is a death taxes and bigger deficits. So, we do see both administrations potentially even pushing further on that. There's not a lot of details for sure. I think that if one wants to look at kind of Fed independence, it's a little bit easier under the current administration versus what some of the chatter, if you will, that a Trump administration might go in there, and that really does kind of play into how the curve is shaped, and really whether or not the markets push back against kind of these deficit numbers.
What about the dollar?
Yeah, certainly we're in it, and again, this is the challenge in terms of really worrying about some of these intermediate term views now. The dollar is in a position where it can continue to remain strong. Rick's bank cutting, right before the ECB starts its process, we're going to see a series of central banks move before the Fed. Those interest rate differentials are going to support the dollar. In the shorter term, longer term, it really does come into play, how this deficit and concern about U.S. exceptionalism evolves over the course of the next few years.
Can you think of a better definition of an oy the deficit Republican than Paul Ryan? I mean, can you? Sort of oy the deficit, then blows out the deficit with tax cuts.
That's literally the entirety of Congress, always, which is the reason why we are now saying,
oy the deficit.
There you go.
Any reason this is going to change anytime soon?
No, I think at some point, what a lot of people say is the market will force Washington to act, not Washington basically reacting to a market that many people say this deficit is unsustainable.
So next big stop for this conversation is the tax cuts that are about to expire. Is it next year?
Yep.
Big decision for 25.
It is.
So if they just push that out, if you get a Trump administration and that's what they do we absorb that in the Treasury market?
We have to. Ultimately, we have to. The Fed could always come back and buy more. That's always, I guess, a risk on both sides of things. Kind of having said that, starting the taper of the QT process earlier makes that balance sheet much bigger. They might not have the same degree of flexibility that they've had in the past.
What did you make of that decision last week?
I thought it was premature. I didn't see the funding strains that they were concerned with. I think that the draining of liquidity didn't occur the way one would have thought, and it's a little bit early.
Well, I'm wondering, though, you talk about how the Fed could buy more of the debt, and that's something that Paul Ryan was talking about, basically monetizing the balance sheet. Does that make you long-term bearish on the dollar in a way that maybe pushes you toward gold and some of these other things that have been rallying?
I wouldn't necessarily say gold because I'm not necessarily a gold bug, but it certainly does make the argument that the amount of liquidity is going to suppress the dollar, for sure.
Okay, so going forward, I guess I'm wondering how you sort of see the new asset allocation with a benchmark Fed rate of 4%. What is your biggest overweight?
Commodities and real assets play a big role in that type of world. So, I certainly would think about that. It's not going to be the best thing for those that are trying to get into the real estate market, but real estate continues to kind of float to the top of the list in the thought process.
Marvin, this was great. It's good to see you. As always. Thank you, buddy. Marvin Lowe there of State Street. Equity futures on the S&P 500 pulling back by, let's call it 0.05%. With some news elsewhere this morning, your Bloomberg brief is Danny Berger. Hey, Danny.
Hey, John. JP Morgan Morgan is limiting dealings with Saganti Capital, the Asian hedge fund charged with insider trading by authorities in Hong Kong. According to our sources, JP Morgan won't engage with the fund on new block trades and IPOs globally. Saganti had long been a prized client of Wall Street banks that needed to unload chunks of shares in block trades and stock offerings. The fund does say it intends to defend itself against the charges. Let's get you a quick check on Reddit shares. They are surging nearly 15% in the pre-market. They posted better than expected results in its first quarter since having that monster IPO. Revenues increased 48%, which far surpassed analyst estimates. The company said that growth was helped by investments in making the site easier to use and improvements in its ad technology. Reddit shares, though, are slightly lower since its trading debut in March of this year. Now, the irony of all ironies, customers of bankrupt crypto exchange FTX are going to be getting their money back plus interest, something that is incredibly rare for bankruptcy cases. FTX, in selling off all its parts, is going to be worth over $16 billion, more than what it needs to cover what its customers and creditors lost in the November 2022 collapse. By the way, that's about what it was valued in 2020, near the height of the pandemic trading boom. Now, that's thanks to a huge run-up in crypto prices since the collapse, including Solana, a coin itself backed by Sam Bankman-Fried. Now, although all those debts are going to be paid in full, nothing is going to be left over for the equity holders, according to the court documents. The cruelty of capital structures. That's your Bloomberg Brief, John.
Danny, thank you very much. If there's a book I want to read, it's a book on this. The cleanup, what they walked into when they had to look at the bankruptcy of this company, what they walked into, how much was left, because you're going to sit here now and say, well, yes, there's enough money to cover the people who were owed money. Was there really a fraud here? Yes, based on what the court has got to say. Listen to these numbers now. It's amazing. 16.3 billion in cash to distribute. Creditors are owed something like 11 billion, customers and other non-governmental creditors.
Yeah, well, to me, this is the question, right? How much sort of leaked out with all of the donations, et cetera. This, to me, is the fundamental issue, though. Is it a crime, and how big of a crime is it if everybody gets their money back and then some? And a lot of people would say, yeah, it's still a crime because they could have gotten bigger returns and some people are getting wiped out. But is it less of one?
It's the end sum that is shocking. Depending on the type of claim they hold in the case, some creditors could recover as much as 142% of what they are owed. So they're making money even now.
Amazing. Let's hope that we don't get a turn in the market, you know?
Well,
These things can happen.
I mean, this is the
It can take a while to deal with, yeah.
This is the Lehman claims. If you could hold on long enough.
Precisely.
Boom.
Well said. Equity futures slightly negative here on the S&P 500. Up next on the program, the White House sending a message to Israel.
If you're going to conduct a military operation, you want to see people evacuated, but those people need to have somewhere to go. And we have not yet seen a plan that would deliver that.
That conversation just around the corner, live from New York this morning. Good morning.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Live from New York City, good morning to you. Equity futures just slightly negative, no drama here. We're down just a touch by 0.03% after the S&P 500 managed to squeeze out a fourth day of gains. Yield to higher by 2 basis points on a 10-year, 447.74. Under surveillance this morning, the White House sending a message to Israel.
It's no secret that they want to conduct a major military operation there. We have made clear that we oppose such an operation. If you're going to conduct a military operation, you want to see people evacuated, but those people need to have somewhere to go. And the place that they go to needs to have sufficient food, sufficient water, sufficient housing, sufficient sanitation, and we have not yet seen a plan that would deliver that.
Here's the latest this morning. The U.S. pausing a shipment of arms to Israel amid rising concerns about its planned military offensive in Rafah. Over 3,000 bombs were set to be delivered. A U.S. official saying a final decision on the shipment has not been made. Israel also reopening a key crossing in the Gaza Strip for aid deliveries following pressure from the White House. Terry Haynes of Pangea Policy joins us now for more. Terry, there is a long history of this, going back several decades. How big, how important is this signal?
Well, it's a long series of signals, isn't it? And they are somewhat inconsistent and somewhat confusing as well. You've got stand shoulder by shoulder, ironclad commitments on the one hand, and on the other hand, wanting to nitpick operational plans on the ground as well as humanitarian plans on the ground. And the nary a word in all of that about what the White House is doing about the artificial harbor that it was building or what it's been actually bringing into Gaza itself. So there's a lot of different signals here. Unfortunately, this has characterized the administration from day one in the Middle East since last fall, and also in others of its major foreign policy initiatives, whether it be Afghanistan or Ukraine.
Yesterday, the State Department spokesman Matthew Miller actually talked about the proposals that the U.S. government put on the table to the Israeli government. But at the same time, what we hear from the administration is that Biden doesn't want to see any invasion in Rafah. Do you foresee a plan that Israel can undertake that the U.S. would be on board with?
No, because I think rhetorically they won't be on board with it no matter what. The reason I say that is basically that the United States has not been on board with the military operations the Israelis have conducted for quite some time now, no matter what they are. And I don't see them changing that rhetoric anytime soon. And, to answer the next question, I do think that's partially politically motivated too.
The timing of this pause comes as Reuters is reporting Bill Burns will be heading to Israel to see Netanyahu. Do you think this pause can basically be used as leverage to get the Israelis on board with a ceasefire agreement?
That depends entirely on what the Israelis want, and they've been cagey in public about what it is that they want, only saying that the Hamas counterproposal of Monday was far away from what it was that was in their security best interests. I don't blame them for that. Negotiating in public is a fool's game and a loser's game, which is exactly why Hamas is trying to drag them out into it. Do I see a difference in the trajectory? Frankly, I do not. Anything that, you've got Netanyahu on the one side, but you've also got a war cabinet that not only has centrists like Gantz in it, but you have fairly hardliners like Ben Gvir. And, Netanyahu's got to satisfy all those people as well. My sense of this is as long as Netanyahu and Gantz are together on things, the Israeli government's going to do pretty much what it's going to do on the current trajectory.
You talk about how President Biden is somewhat politically motivated. Certainly this is an issue that has reduced some of the support he has, particularly from the younger cohort of voters. What more can he do? He is going out, he is interviewing at a time when his competitor is locked in a criminal trial in New York City. What can he actually do to get an upper hand in this conversation?
My unwanted 2 cents of advice to the White House is unwanted and unsought, is that they need to be clear about what their goals are, and they need to execute them clearly. They are going to, if they lose some people as a result of that. They're going to gain people on the other side by virtue of being clear and standing up for what it is that the administration wants to do and what's in the United States' best interest. Not Biden's political interest, but the United States' best interest. The administration is not clear on that. They never have been clear. It's one reason, by the way, why it took 6 months to get Ukraine aid, is because the administration is not clear and they're not persuasive, and they need to be both.
Is there a clear or persuasive message in terms of policy coming from the Trump campaign right now?
What I think the Trump people are doing is, firstly, they're distracted, and secondly, they're following the political adage that when your opponent's tearing himself up, there's no need to jump on board.
Terry, we do know that, as of CNN saying last night, President Biden's going to be sitting down with Aaron Burnett of CNN this evening. He hasn't really sat down and done the formal interview process. They've been looking for other ways to get the message out. Does he need to be doing more of this type of communication?
Well, he needs to be doing more of that, and number one, and number two, he needs to be doing more unscripted. I'm not privy to what Ms. Burnett or CNN, specifically are doing, but the White House seeks to control, any White House seeks to control, this is not new, but seeks to control the environment and even the questions as much as possible. The president needs to be out there a little bit more unscripted and, frankly, a little bit, and able to be a little bit more blunt about what his priorities are in foreign policy and, frankly, in domestic policy as well.
Terry, if the election was today, who wins?
Today, I think Trump probably wins by a nose, but it's 6 months out, and I think as I've said before, I think the Biden campaign's discipline, both message discipline and get out the vote discipline, probably carries over. And as the third party, is just because Trump is topped out, and third party candidates, I think, wane in popularity.
That's been your message for a while, Terry. Appreciate your input. I'd always call you for advice, Terry. Terry Haynes of Pangea Policy. Terry, thank you. This has been his base case now for a while, going into November.
Yeah, there's a lot of time on the hands, and then you have a split screen like we had yesterday. The President of the United States giving a speech on anti-Semitism, Holocaust Remembrance Day, and at the same time, you have the former president in court, where we learned a lot of salacious details regarding, this alleged affair he had with
some details we didn't want, to be honest with you.
Some details were maybe too many, and that's wall to wall in a lot of network news, creeping into the American psyche right now, 6 months out.
Didn't even the prosecutor say, like, okay, all right, okay, I think we're good. Yeah, exactly. Yeah. Maybe we should have an objection. I just want to say, this gives me complete confidence that they'll get the debt under control.
Oh, this does?
Yeah. Like just.
Well, the testimony yesterday?
I mean, the split screen. You talk about the split screen, right? You've got, Stormy Daniels on one screen, and then you've got concern about the message on the other. I'm just saying.
Certain quotes from that testimony yesterday.
You want to share?
Just things you don't want to think about. A lot of them.
Do you want to share now?
Absolutely not.
You could.
Even I can filter that. Coming up, Angelo Zeno of CFRA with Apple seeing positive news out of China. Their stock is up by 0.4% from New York. This is Bloomberg.
that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Coming into Wednesday on a 4-day winning streak on the S&P 500, the longest winning streak on a benchmark going back to the middle of March. Right now, equity futures just about unchanged. One eye on the small caps. The Russell's down today, but over the last 5 days, up big time, up by close to 5% over that period. In the bond market, switch up the board, lots of supply to talk about. The 2-year, 483.44, yields just about unchanged. The 10-year, climbing by 2 basis points to 447.74 after yields dropped over the past 5 consecutive days. Over the last week or so, we're down about 20 basis points across the curve, Lisa, from the 2-year out to 10s.
Should we talk about auctions?
I teed you up.
Yeah, you want to talk about auctions. We've got $42 billion of 10-year notes being sold today at 1 p.m. I want to see how well it's absorbed. Actually, the 3-year auction went fine yesterday. However, we saw yields that were the highest or the second highest, one of the top couple of highest levels that we've seen in terms of funds sold. I was like backing away. I think it's like there are only two other marks that were higher. This is really going down in flames. Let's reset. Moving on. Basically, it's getting more expensive for the government to borrow money, and that's what we're going to see at today's auction.
That was cruel. I'm sorry. 447.74 on a 10-year. Let's turn to foreign exchange. The euro, total snooze. 107.52.
Way to sell it.
I know you've got stuff to say about dollar yen, so we'll go there. 155.37. You nailed it about 30 minutes ago. The language has got tougher from the Bank of Japan governor, but I think the price action speaks for itself.
Basically, weaker means that people don't believe it, and that's really the issue for Japanese officials now. It's basically show us that you actually are serious, show us you can do something and that you will do something, not just sort of coming in with a couple billion here and a couple billion there and trying to push out some of the people who are more speculative. That, to me, is what this market says.
Reminds me of President Draghi used to say, we don't target the foreign exchange rate, we don't target the euro, but the FX channel is an important one for price stability. And I think that's basically what you're hearing from the governor of the Bank of Japan this morning.
Yeah, how do you interpret that? Please.
Getting serious about policy, I think. Bringing up rate hikes. I do wonder 2 things. 1, how serious they are about hiking in response to this. And 2, whether the shift in language is off the back of something Secretary Yellen might have said. Maybe in private or perhaps on the record, has just maybe pushed them to change the way they're approaching this issue, because it's certainly a change. It's a shift.
That's a great point. Basically, it's a great kind of PR move for them to say, look, if you're job owning that you want us to basically give you notice, you guys have to show recognition that your policy is inadequate to really counter the moment, and that seems to be what he acknowledged.
And that you're willing to change. Speaking of changes, Riksbank, if you're wondering why that currency is on the screen, SEK, it's not because TK's around a table and we're now talking about stocky all over again. Euro Sweden, okay? So let's say weaker Swedish currency on the screen at the moment. Lisa, a rate cut, first one in 8 years.
Yes, since 2016, and they indicate that they're going to cut rates 2 additional times later this year. Just to put this into perspective, their currency is already down about 4.5% versus the euro, and more than 7% versus a broad basket of developed market currencies so far this year. So there's further weakening to go. They say they're okay with it. Basically, this is what we need for our economy. They pledged to do more stimulus. To me, how much does this sort of hinge on it being okay if the Fed cuts rates. And that still remains the question about divergence.
The governor of the Riksbank had an interesting line, and I wonder if this is what we hear from the Federal Reserve the day they cut interest rates. We've come a long way, but I will never say that we have defeated inflation because my job is always to be vigilant. That's from a central banker on the day they cut interest rates.
This shows how difficult it is for them. We hear this from all of them.
Yep.
Basically, we want to make sure that we're not overly restrictive, but, you know, we're still worried about inflation. It's basically the ongoing concern for all of them.
That's the latest out of Sweden and elsewhere. Under surveillance this morning, the US pausing a weapons shipment to Israel. A senior administration official telling Bloomberg President Biden still has concerns over an invasion of the Gaza city of Rafah. The US has not made a final decision on Anne-Marie on whether to go on with this shipment.
That's right. Right now, this is just a pause, not a full-blown suspension yet. We need to see, I think, what really happens today. There's going to be a meeting, according to reports, with Bill Burns and Benjamin Netanyahu. Axios yesterday reporting with the fact that Israeli officials are increasingly more frustrated with the way the United States is handling these hostage negotiations. Potentially, when you have things like a shipment of bombs not being able to go through, does that maybe push the Israelis to sign up for the ceasefire agreement?
I mentioned this to Terry. The history of this goes back decades. We've seen so many examples of this happening.
Whether it was shipments or whether it was loan guarantees, we'd seen this with Obama, with Reagan, with Nixon, with H.W. Bush. It's rare, though. It's not unprecedented, but it is rare when it comes to the U.S.-Israeli relationship.
That's the latest on that relationship. I want to turn to TikTok. The parent company ByteDance taking the U.S. government to court. The China-based company claiming a divest or ban law aimed at TikTok violates the First Amendment. ByteDance has until January 19th to sell or face a ban if courts do not intervene. Lisa, we talked about this in the last couple of weeks. A Chinese company using the Western system, the U.S. system, against itself.
Which is exactly what you're going to see with freedom of speech versus national security. This is the core issue in this court case, and it's a fascinating one. How much does this set the precedent going forward for what we can actually understand under the rubric of national security, which is being used for a lot of things right now? To me, this is kind of going to be a landmark moment where they have to define that. I'm going to be watching closely.
Well, it's going to happen in the start of 2025, right? This goes to January 19th, just before their inauguration. Added on top of the debt ceiling, added on top of tax cuts being extended, likely. And what you see here is that the current president could have add on an extra 90 days to that. So this is going to drag out. But Steve Mnuchin yesterday, speaking to Bloomberg, said he's looking at algorithms, potentially talking to tech people to see if they could remake the algorithm for maybe his pitch to buy TikTok.
It's amazing to see Chinese companies talking about freedom of speech, isn't it? Just the deep, deep irony of this playing out before our eyes.
Basically, China does not allow U.S. media companies to operate in China because, guess what? They don't want it. Period, full stop.
Yep.
In the U.S., we do operate under an umbrella of free speech and a whole host of other freedoms that are guaranteed. To me, it's important to go by that, though. And it's important to sort of follow those rules because you don't, I mean, there's a sort of question here, and I don't want to go into should or should not, but there's no question, is the U.S., and you raised this, becoming more like China in order to defeat China? And I think it's important to understand where that's okay and where that's not okay.
That's the latest on TikTok. Let's stay on China. iPhone shipments in China jumping 12% according to government data. Apple saw a boost for the month of March after retailers slashed prices. The move reverses a slump of 37% in the first 2 months of 2024, according to Bloomberg's calculations. Angelo Zeno covers Apple for CFRA and has a buy rating and price target of $210 on the stock. Angelo, let's catch up on what happened yesterday before we get into the latest from China. The update to the iPad, I think as you indicated, we're talking about 5 consecutive soft quarters for that product category. Did you see enough to turn that around?
We do. You know, you're looking at 5 year-over-year, declines in consecutive quarters, 9 out of the last 10 quarters, to be honest with you. So it's been weak for a while. They've had to kind of go through those pandemic, post-pandemic blues. And then, there hasn't been an update since the fall of 2022. So this is a notable step up here in terms of the capabilities from the M2 to the M4 on some of those internal upgrades, specifically on the Pro side of things. I think the higher price points on the Pro side of things also is going to help kind of reinvigorate growth on the iPad side of things. So our view is, over the next 3 to 4 quarters, expect a return to year-over-year growth within the